Okay, thank you again, everyone, for coming. And just as everyone's getting excited, we're gonna get started. No, I'm really excited to see a lot of familiar faces from last week and a few new ones. It's going to be a really productive deep dive discussion today with three really great guests, and we'll have plenty of time afterwards to stick around and feel free to come up to myself or John or Ramya afterwards, and we can learn more about you guys. But without further ado, I'll kick it off with Jess, who is going to talk about some market research services that they provide at NC Biotech. And yeah, let her give a little bit more background, but we'll go from there.
Hi, y'all. I'm very excited that I get the little owl thing to stare at me. That's not creepy at all. But I'm Jess Reese. I'm the Director of Life Sciences Intelligence at NC Biotech. And I'm here to talk to you today about how we can help you out with market research resources. First, gonna figure out how the buttons work. You know what? Yeah, here we go. There we go. We can do it. That's called improvisation. So if you're not familiar with the North Carolina Biotechnology Center, I'll just give you a very quick spiel about that. Some of you might be, but if you're not, we are an economic development organization that has been building and growing the life sciences industry here in North Carolina and beyond since the 1940s. So we're going on 42 years of doing this. And pretty much since our inception, we've had some form of a library. That's what LSI is. We'll talk about that more in a minute. But what we do at NC Biotech goes far beyond resources like I'm going to talk to you about. We do recruitment, both of companies and employees. So that's bringing companies to North Carolina, that's growing the companies that are here in North Carolina, that's supporting startups, that is also growing the job market and bringing people to those jobs. We provide loans to small companies in what we call the valley of death. So when people are in that phase and they need a few more dollars to get them to the next phase of development, we do that for life sciences companies. We also provide grants to the universities to help with highly commercializable technology. So to take something from prototype to actual viable company and technology and get that out to the world. And we also have a conference center that is here. It is a beautiful space if you ever have a chance to make it over there. And we do a lot more to just uplift the community, uplift beyond North Carolina's boundaries. So we'll be at Bio, helping out there and having a booth and really highlighting North Carolina and also, again, just lifting up the whole industry. So what we aim to do is we aim to be a competitive advantage in the life sciences. You're going to hear me say life sciences so much over the next 15 minutes or so, but we engage partners, we make connections, we maximize opportunities, and we deliver solutions. One of those solutions being life sciences intelligence, all with the aim of maintaining North Carolina as a global life sciences leader. So what the heck is an LSI? What is a life sciences intelligence? These are words you've heard stuck together in an interesting order. Well, we are NC Biotech's answer to a library. The difference being, if you close your eyes and you think about a library you've been in, you might be thinking of a room full of books, or you may be thinking of rooms of terminals with computers. We're neither of those things. We are a little bit different. We aim to be your one-stop shop for information. So a traditional library, you come to it for resources primarily, and while we do have some resources you can access, we also provide answers. Answers are our bread and butter. Whether that's a quick answer or a whole report, we are working to improve our clients' decision-making by identifying, compiling, and analyzing very targeted information. We like to say these days, we are the human advantage. We are all living in an era of mis, mal, and disinformation. We are surrounded by information, and just because it's information doesn't mean it's true, right? We've had this confrontation of people being like, well, it's information, so that's got to be fact. And that's really not the case, right? We're surrounded by so much. We're inundated day in and day out. We are the people who help you sift through that to validate and verify, particularly as you are seeking funding. It is so important to have that third-party validation to be able to say where a data point came from, right? It's not enough to just say, well, ChatGPT told me. You've got to get back to that source of the information, and we can help you that. We recognize it's really, really tough right now. So people bring us their questions. This is by no means an exhaustive list of the types of questions we get. I could spend 3 hours and we wouldn't get through every type of question that we're asked, because each of you, what you were doing is unique to you. Even a company doing the exact same thing, gonna have different questions. We all have different backgrounds. So this is just to give you an idea of what we can do. So people ask about market size for their product. They ask about competitors and what are those competitors doing. They want to know around the trends surrounding their technology or the trends in a particular space that they are considering entering. They want to know about partners and experts they should be working with or consulting. And also right now, big question, all of you clearly care about funding. Where can I find non-dilutive funding? This is a question we've always gotten, but I can tell you in the last year and a half, we've gotten this question far more often than we ever did in the past, because finding that funding and securing it is more important than ever. We are within the life sciences, but NC Biotech broadly is pretty sector agnostic. When we say life sciences, LSI is as agnostic within the life sciences as we can be. So sure, we mean biopharma, devices, and diagnostics, but we also mean ag tech, animal health, and related companies. So folks working to support the industry, service providers, we also work with them. We work with health systems. We even work with universities. So it's, if it can tie back to the life sciences in any way, we can at least get people started. So we, like I said, aim to be a one-stop shop for information. So how can we help you? That's the main thing, right? I can yap about LSI all day, but if I don't make the connection for what we can do for you, it doesn't really matter. I'm going to start by talking about our custom research services, because this is what really pulls us apart from, again, those traditional library spaces or what you might be able to do on your own. When I say the word custom, I mean custom. So I have up here a QR code you can scan for our services menu, and I have some physical ones that I'm going to leave in that table that you made the name tags at. We've got some physical ones. These are, again, not exhaustive lists of how we can help people, but they're to get over that fear of the blank page and to get a conversation started. I often find that people come to us and they're like, I don't even know what to ask for. So we made this menu. We have a few big buckets of information on that menu that things might fall under, like market landscape, customer landscape, the clinical trials landscape, funding opportunities, and really big, and benchmarks there. Competitive landscapes, those are super fun to do for us. Costs and pricing. A lot of times people don't even know where to start pricing their product, so we try to help with that. Scientific literature searching. This is an area, particularly if folks are used to university access to resources, becomes very difficult outside of the university system, not only to access platforms to do the lit searching, but also to get the literature. We can help find experts, and then we have these nice NC Biotech company directory exports. The company directory is a free resource that we have that you can access that's got pretty much every life sciences company and support related company in North Carolina in it. I like to joke that my colleague Jillian, as soon as a company is conceived of, she knows about it and puts it in the directory. That's not 100% true, but it's pretty close. Like as soon as someone is ready to be public or not, is out of stealth mode, she gets them added. And so we also customize what we do, not just to the information, but to the format. So it's just what you need. You're like, I don't care about the market landscape. Got that. I just need to know about clinical trials. We're not going to waste time pulling the information you don't need, you already have. We're also going to put that together within your budget. So these that I'm talking about right now, these resources are paid for. We'll get to the budget piece, but we're a nonprofit. We're not in this to make money. We're in this just trying to pay for some of the resources that we use. So we recognize and we try to keep the budget down for you and only work with what you have. If you come to me and you say, I can pay for 1 hour, well, we're not going to go a minute beyond that hour because we recognize that every dollar is important at this stage. We also deliver it in a format that works for you. For some people, for most people, I would say that's going to be a PDF format. We're going to convert a Word document to PDF. It's going to be nice and polished, and you can hand it off as is. You can attach it to your applications, or you can pull information from it, fully cited. Other times people want slides. We can put together a full slide deck, or we can give you a few slides to plug into your pitch deck. That often happens. And sometimes people just want Excel sheets. They want data in Excel sheets. They want to play with it themselves, and that's totally fine. We work ad hoc, so people come to us and then we work on a project, they come back a few months later, they might come back a year later for a refresh. Other folks want to have access to us all the time, so they might get a retainer. You've got a retainer, you get a little bit of a discount, and you kind of got us on call. The way you think like an attorney on retainer, we're right there. You come in with that retainer and we're going to put you at the top of the list. So there's more, there's always more. We do, as part of that custom research, sometimes people want alerts. Again, if you want a regular update on something, we can add that as part of an alert. We provide contract services. So I've got one of our research analysts with me, Margaret Groton. She's over here in green. She's listening to me give the spiel. She mostly works with our contract companies. A little bit different. Those tend to be more traditional library services. We do offer that. I do free 30-minute consultations and orientations all the time. They're virtual, so if you have questions, know someone, if you just want to connect and start brainstorming, that's always free. I love yapping and I love yapping with people, so please do reach out. We have our free market report collection. This is huge, y'all, because if you don't know, market reports cost somewhere between $5,000 and $15,000, depending on the publisher, for one report. We provide everything that BCC Research publishes available on 3 Kindles in our library space. And I've got a whole slide about that because it's so important, but this is the thing. If you hear nothing else from me today, please remember that we have access to market reports. Don't go and spend money on a report if you haven't had a chance to look at it and don't know that $5,000 is going to be worth it, because oftentimes it's not. We also have that free company directory, a great place to also find other resources. So if you are looking, John and I were talking when I came in that sometimes folks are looking for like regulatory support. Well, there are folks in the directory that can do that. There are patent attorneys in that database. There are folks to help with grant writing. So it's not just for life sciences companies. It's support companies that often work outside of the life sciences as well. And then we also have a free career center that's free to post on as an employer and an employee. That's a fun resource as well. Those market reports, like I said, we get everything from BCC Research. What we automatically put on those Kindles is the life sciences focused reports, but they are not industry agnostic. They're fully industry agnostic, right? So they've got aerospace, they've got consumer to consumer products. We don't necessarily immediately put those into the Kindles, but if you reach out to us and you say, hey, I'm interested in this BCC report, we'll pull for you. Just let us know. These are all self-service. So if there's something in there and it's like a pharma report, you can walk on in and access it today, as long as our building's open. So Monday through Friday, 9 to 4:30, and the holiday. Just come on in. You can access those. If you need help with them, reach out to us beforehand. And usually our program manager, Claire, will help you get through those. She'll find the reports that are relevant. She'll upload those special reports for you. We also have Statista. I recently learned they pronounce it Statista. I've been calling it Statista for years, and I have a little bit of a grudge against them for telling me that I've been saying it wrong. But we have this as well as statistics and business intelligence. If you've ever gone into Google and run a search and looked for a graph, you switch over to images and there's a graph, it's probably from them. So we have that with all of these resources that are self-service, free to access on your own time. You can take as many notes as you like. You can sit in there for 8 hours and take notes. That's totally fine. No photos and no scanning or anything, just because the publishers say we can't. And we want to make sure these resources stay available for you. So this is probably the most important thing I'm going to tell you about. And again, available all the time. We're constantly updating them. We update those reports on a monthly basis. But again, if something's published the back half of the month and you know you're coming in, just reach out. So please reach out if you're not sure if we have something.
It's a totally free walk off the streets.
Yeah,
Required.
you could walk in right now. You could leave. You should stay here for the whole program. You should come in tomorrow morning at 9 o'clock and we'll get you set up. Yeah, these are fantastic. These reports are also like going through the BCC market reports, or when I was doing research, when I was one of the research analysts on the team, these are the reports that taught me what I needed to know to go out and find that type of information elsewhere. They are, I will say, not always the highest quality sometimes. That's not just BCC, but all the market reports. And that's why we have them. So you're not spending your money on them. Let us spend the money. You save that money for something that's more important. Also, if you're in and you look at something, you come in tomorrow morning and you're reading a report and you're like, this number seems wrong. Well, guess what? Tell us that number seems wrong and I'll reach out to our contacts at BCC and ask them where it came from. And they'll send us the calculations of how they pulled that. So it's a really good connection for you. So budget, we get back to that little piece that we talked about, the custom research. Like I said, we try to keep this as low as possible. So for our North Carolina companies, our budget is our pricing is $150 an hour, starting at a half hour, so $75 minimum. We're changing these numbers, they change in July. I'm here to tell you, this number's not changing this year. For us, it's far more important that we keep this as stable as possible. Again, there's been like big change times, right? It feels like people have been saying that for the past like 5 years, but we're really in it right now. We're not looking to change this number. We want it to be accessible. We do have discounts for retainers. So if you're doing a 25-hour retainer, that'll get you a 10% discount. If you're doing a 50-hour, it'll get you a 15%. If you're looking for a project that's more like 15 hours, let's talk. We might be able to do a little bit of savings there too. We're always open to having that conversation. Our alerting services are also available at that billable hour. So either ad hoc or as part of a retainer. We do scientific literature delivery. So we don't just do the searching, we can pull scientific articles for you with the proper copyright and licensing associated. Didn't know, you go to Elsevier and you buy an article, that doesn't mean you're getting the copyright you need for that article. It's very straightforward and not confusing at all. And I'm being facetious there, but if you need to submit to the FDA for something, we can access articles with that proper permissions on it, because typically that does cost a little bit more. And the way we do that is we are charging just for the price of the article and $10 to process it. If you need 50 articles, we're probably not even going to charge the full processing fee. We're going to work with you again, figure out exactly what you need. If you come to us and you ask us for an article, and Claire, our program manager, realizes that article is actually freely available, we're going to tell you it's free before we go and purchase it for you. We're going to ask you want us to just purchase permission. So again, always trying to save for you. We put together every year or twice a year, an investments and NC companies report that's done by our sister team, Impact Research, and that's a flat fee of $300 a year. And we also do company directory export. So you might be thinking, why, if the company directory is free, would I ask for an export? It might be if you need a pretty curated list, if it's a search that's too complicated to do on that free interface, and then it's priced similarly, 50 cents per record, but a $75 minimum. Also, more things, I just feel like, but wait, there's more. I'm an infomercial. We do every year what we call Informing Innovation Presents. This is a webinar series. We're doing 3 this year, maybe more if we decide to do some shorter ones. These are currently 3 one-hour sessions. This started as a full day event that was not free. And we found that actually there was a lot more value across the state if we opened this up and we really targeted it in, because again, we're trying to make things accessible to you all as much as possible. So this is a free virtual webinar 3 times a year. Our first one was on May 21st. Margaret led that one. It was about PubMed and Europe PMC. This is recorded. It's freely available on our on-demand portal. You can get to it ncbiotech.org/LSI. Or if you can't find it, I'm going to leave my business cards here and you can email me and say, hey, Jess, I can't find that portal. Can you please send it to me? Happy to do that. Later this summer, I'm going to be presenting on building a resource portfolio for folks who are looking to get their own information resources, whether that be literature or a deals database, a drug pipeline database, how to navigate that because it is incredibly difficult and can be hard to balance your needs with your budget there. These resources are expensive. And then this fall, while we don't do primary research, we focus on secondary research. Our senior research analyst, Karen Schenk, has been exploring this year how we can support primary research efforts. So she'll be doing a panel this fall with some experts that she's worked with to discuss how to approach primary research and what information do you need to get started there. Like how do you succeed with primary research? So again, past presentations, the ones from last year and this first one from this year, are at Informing Innovation on Demand at ncbiotech.org/LSI. I highly recommend checking out from last year, Market Research 101, all about how you can get started doing some market research on your own with no resources whatsoever other than a laptop or phone. That one's really fun. Karen presented on that one. And if you want to stay up to date with Informing Innovation, if you want to get the link for this next session as soon as it comes out, I'm expecting that to hit the next newsletter that we have. You can scan this QR code and sign up for our newsletters. They'll get you access to all of NC Biotech's newsletters, not just the one for LSI and market research. But also, if you can't find that later, you're welcome to reach out to me. I think that brings us to just, here's the things you need to know. At the end of the day, if you remember nothing else from me, remember we have market research reports that you can access for free anytime that our building is open. You can email us at research@ncbiotech.org to start a conversation, even if you don't know what that conversation is going to be about. If you're just like, hey, let's talk. I want to hear more about what you do. Is there a place for us to work together? Check out our website, ncbiotech.org/LSI, to learn more about our offerings, our services, and get to those webinars that have been recorded. There's also access to one-pagers there and the slide decks for those past presentations. Come by and check out the market reports. We're over at 15 TW Alexander Drive. We're like less than 10 minutes from where we are right now. Super easy to get to, just around the corner. Open Monday through Friday, 9 to 4:30. If it's one of those weird holidays where you're not sure who celebrates it, who's closed, if it's state or federal and you're not sure, just reach out, email us, and we'll tell you if you're open. If we're not, we'll tell you next time we'll be here. So yeah, that's really all you need to know. If you remember nothing, if you remember research at, that's good enough for me. I can get you the rest of it later. But does anyone else have any more questions? Yes.
So, could you please go the customer research services slide?
Yeah. The one with the QR code. This one?
Oh, this one, yeah.
Yeah.
So finding experts, like, do you mean subject matter experts?
Yeah, it can. Yeah, subject matter experts, key opinion leaders. We're also now hearing the phrase digital opinion leaders. So if you're looking for folks, a lot of times key opinion leaders will be the most like highly publicized name in a space, but not necessarily the easiest to access. And these digital opinion leaders tend to be more accessible and more willing to have a conversation. So yeah, they can also be subject matter experts. It can be just like a partner. It's really whoever you need. We'll try our best to find them. Yeah. Anyone else? Yeah.
How was that, the term you had mentioned before, the digital opinion?
Yeah.
Sorry, what was the keyword and phrase again? Digital
Opinion leader.
It is a digital opinion leader.
Yeah.
Are they a vlogger or?
And I think it's just now we're seeing more of, in traditional publishing, and Margaret comes from a publishing background, so she could tell me if we're wrong here, but a lot of times you're going to see names, there are positions in the list of names that are really flashy. So somebody's up front or at the very end, you're going to see these names, and they're not necessarily the people doing the work. They're the people who did the work 20, 30 years ago. And those folks listed in the middle are the ones that have been doing the science a lot of the times. And so now what we're seeing is those folks are maybe starting Substacks of their own and are posting there, and you can maybe make a little bit of a connection in a way that is still a vetted, validated person, but is maybe more willing to talk to you than someone who has been at the university for 40 years and doesn't want to be bothered. I have, in addition to having these, menus, I've got kind of a one pager about what we do. I've got a few of my, business cards, and we also have these handy little bookmarks that just have our email address on them that, we're really excited about, so. Anything else? Yeah,
This is a little outside the domain, but are there any mechanisms for accessing scientific literature for free, like through the public universities as an individual?
sometimes, yeah, you sometimes can, if you go and you can access, sometimes through your, depending on the public library system you're part of, you might have a bit of access as well, so that, like Durham County and sometimes get access to things, but check the university just as an individual, especially if you're just looking to educate yourself. And you don't need to do a lot with that article right now. I also highly recommend the browser extension Unpaywall. You can add it to Chrome or Firefox or whatever you use, and it's used by like the National Library of Medicine. It's used by universities, and it's going to tell you if an article is open access or not, and it will direct you to it. So if you're on a web page and you see a citation, you can click it. If it's green, and it's this little like lock on the side of your screen, and it'll take you right to the PDF. And a lot of times we all use that on our team.
Has the NC Biotechnology Center ever thought of, for small companies, would they negotiate some kind
We've
of
tried,
low cost license or
Yeah,
that's
we've
not
tried,
possible?
yeah, we've been trying. I've been at NC Biotech for 10 years, and we've been having that conversation since I started there. The problem being that we're a nonprofit that works with for-profit companies, and they want to put price tags that either we can't afford on it, so we're not going to add beyond what the universities pay, or they just don't want to access it at all. What I am hearing, however, is a lot, and we've done this before, is if an individual or a small company is looking to purchase their own, if they come through us, I can make connections and get a discount that way. But this is something we are trying to figure out, because we're looking also to be able to do more support in the realm of like regulatory, lit searching, and systematic reviews. And in order to do that, we need access. But a lot of these big publishers don't even we can't even have our own collection for internal use, unfortunately. Yeah, we know it's a need, and it's tough. The publishers they don't make things very easy.
It's hard, it's case by case, but if someone wants to say, find a grant, or, just that they can apply to this, is there a ballpark of how much time, a certain
Yeah.
sample search could be?
Yeah. We actually have, right now, we have a kind of, it's not a totally prepackaged thing, but we have what we call funding roadmap. And it is customized, but we have a template that we use for it. And so actually, that would have been something that probably would have taken 4 or 5 hours in the past. And now it's more like a 1 to 2 hour project. Because what we do is we just go through, we've got all of everything we know about at the state and federal level, and we go through and just remove what's not relevant for the person who comes to us, and then we do some specialized searching if there's any foundation in their area. So actually, that is something that used to take us a very long time, and now is much quicker.
Okay, great.
Yeah.
Do you guys also, do have a research, like, I don't know, for SBIR?
We were just like hitting on stuff that we're going to be marketing this summer. So
I didn't know.
Yeah.
Yeah.
It can be written in, and we have been a few times, when folks get TABA funding, we've been written into those. We are able to be used, you get the TABA funding, you can use it for research support. We can be used in that way, and we just tend to we like to meet, have a quick conversation, give a quick estimate there. Typically that does gonna fall into our kind of, where we give you do a little bit of a discounted, and we do some quick math. And we give, what we found is that we don't have to be hyper specific in terms of what you're asking for to use our services. We just have to give kind of a big statement of work and how much we allocate for each. And so if you need market research and you need scientific lit searching and experts, we don't have to get that balance perfectly right, as long as we're listing out vaguely what we're doing. And we actually have a meeting later this week to talk more about how we can specifically support not only applying for TABA funding, but what to do after you get it. And so that's our marketing efforts coming up this fall.
Okay, Yeah, just as a reminder for everyone that,
Yeah.
yeah, ABBA is what you request before you apply and during application to do market research.
Yeah.
You can use either 6,500 for phase one or 50,000 for phase two.
Yeah.
So clearly a lot of work.
And we've been part of both.
Yeah.
We've done each phase with people, and so it's, yeah, we've been recently brainstorming because back,
Yeah.
and that's exciting. Yeah.
And you help often with people before they write the grants, like commercialization
Yeah.
plans or.
We tend to help early. The earlier we can help, probably the more useful we're gonna be. And it's either we're gonna be like super helpful early, or if someone is like denied, and you know why, we fill those gaps, and then later we could do some more special customized, like get really creative stuff. We also within NC Biotech, because we have our university grant program and then the loan portfolio program. We do due diligence internally, but we also work with the folks applying for the grants and for the loans, and have found that if you work with an external party to do that, like us, it doesn't have to be us, it's someone like us. You do have a lot more success, because again, that third party validation, it's just trusted, you see another name on it, especially if it's got decades of, good name recognition, it's just they're gonna trust that over, I did this myself.
Yeah.
Which is sometimes unfortunate, right? Because it'd be hard if you don't have the funds to do that.
Yeah. You know, we had Chris here last week from one of the, you get, I don't know if you can get reimbursed, like say someone spends 5,000 with you, can that be reimbursed with one North Carolina or?
Yeah, I think because we've done sometimes folks, and I don't know that we've gotten from them specifically, but a lot of times we'll be introduced to a group through like NC Innovation, and they'll pay on behalf of a company for us. Yeah.
Okay, yeah.
Yeah.
It's, yeah, one North Carolina is like, it can be reimbursed, so, yeah.
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 So we have to get payment from.
First, from the
Yeah.
company.
Yeah, but whatever we need to, so we can put together statements of work before we do work, or after we can, whatever we need to do to support someone getting that reimbursement, we can certainly help with that.
Okay,
Yeah,
no, thanks.
yeah,
Is there a confidentiality agreement that has to be signed with
you
you?
don't have to, we have kind of a blanket statement where everything you do with us is confidential, but we also have one that we can plug in specifically for you, whether it's your name or your company, and I sign, you sign, then we keep it with that analyst as much as possible. If we need to bring in another analyst on the team, we'll let you know to make sure that's okay. We also work with companies that are totally in stealth mode. So we'll give a code name and no one on the team, like if Karen does a project and Margaret's not allowed to know, Margaret will just know Karen's working on project X. However, we need to be stealthily, we work with our finance team that way too, that we're like, hey, you can't, we've got to kind of build this one just to the individual. So we try to help as much as we can. Well, I'm gonna leave my stuff at the back, because I have to run, I can't hang around, but please feel free to reach out if you have any more questions. If you've got questions that you'd like to ask, but you're not comfortable asking in front of others, or you think about it 20 minutes from now, just shoot it over an email.
Thank you. This presentation set up. I don't know if I saw Lauren. Yep, there you go. Okay, thank you. Back. Yeah. Nice to meet you. Yep. Good to see you. It's, yep, connected, so.
Which one's working?
Probably just using the arrows, so you've got 5 minutes, so.
Oh, well,
So,
I'm an auditor, aren't you lucky? 5 extra minutes.
yeah.
Okay, well, hi, everyone. My name is Lauren Joyce Allison. I'm with Eisner Amper. I'm a partner in our assurance group. Eisner Amper is a full-service public accounting firm. We have tax advisory, audit, outsourced accounting, you name it, we probably do it. There are 5,000 of us across the country. My focus, though, is with for-profit grant recipients. And we are going to talk a little bit about federal grant administration from an accounting standpoint, and keeping in mind things to be thinking about as you're going through the budget process, where I see a lot of slip ups. So I have a colleague here today, between us and 5 other people, we do about 120 audits, compliance audits every summer. And our goal today is to kind of talk about the things that will prevent you from being caught with a finding. We have seen more and more findings popping up where the NIH and the DOE are reaching out fairly quickly, and their first response is to ask for that money back. Exactly. I saw a grimace already. That's really hard when you're a startup. There is an extra funding to do that, and if you've already spent those funds but you didn't handle those funds appropriately, it puts you in a bit of a pickle. So our goal today is from the get-go, how to get to a clean audit so that even through the budget process, you're thinking about things and the impact they'll have long-term. And then hopefully avoid all those findings we talked about. Okay. So we're gonna talk a little bit about an accounting system certification. We have seen more and more of these where they actually need to be audited early on. It used to be sort of as you move to a phase 2. But we've had requests now, especially through the DOE, wanting them as you move into your first phase. So just keep that in mind. It is a checklist that you sort of self-certify and submit, or they may request a third-party auditor actually to come and audit your accounting system for certification. We'll talk a little about what that entails, what it means to be certified. It is doable. Everyone can take it on. Just making sure you understand the terms that you're agreeing to. Next, we're going to talk about compliance requirements because they're really going to drive how you design your accounting system, how you're doing your reporting, and then how you're going to your internal controls, how you're going to define those and document them. The one I get all the time, indirect cost rates. We're going to talk about how to calculate that and the impact when you're in your budget period and thinking through that process all the way through when you have your grant and you're administering it onto reporting. And then budget to actual monitoring. This one, we see a little bit of a miss up regularly where just not monitoring it on an ongoing cumulative basis puts you in a little pickle at the end when you've either run out of funds for the things you need, like your subrecipient, and just making sure you're monitoring it through the process. And then last, we'll talk a little bit about reporting. We'll talk a little bit about audit thresholds. Things have changed in the last year. Just so you're aware of the costs associated with those as well, because they can be a little alarming to all of a sudden have to pay for an audit. So I'll be pretty straightforward on what those cost, and so you know what to expect early on. All right, so when talking about a compliant accounting system, QuickBooks is an easy go-to. We see it all the time that it is just the most straightforward, it's user-friendly. There's a few more out there now that are Xero, a couple others that are equally in the same thing. They're meant to be user-friendly. They all can be used and they can all become compliant with a few basic functions added. I would say if you're leaning towards Excel, lean away. I love Excel. But in the long run, it's just painful. It doesn't do all the things you need to do to kind of capture the controls to make sure that your ongoing accounting is going to be easier. Plus, I can't tell you how many people I've worked with where going from Excel into QuickBooks is a very painful, shaking everywhere going, yep. If you've gone through it, it is painful, time consuming, going back and reconciling. It's just easier from the get-go. It's about 150, 175, depending which version each month. So it's a little bit of investment, but it will save you in the long run, I promise. So most common we see is QuickBooks. I recommend using your class function. It's a function you can turn on. It does put you from the baseline level to the intermediary. I think they call it the pro level, but it gives you that class function. That's going to give you the ability to assign a class for each one of your grants, any commercial work, your general administrative expenses, your fringe expenses, and then that unallowable bucket. This is an easy way just to track that you're keeping your expenses in nice, neat little buckets. And also when it comes to reporting, that it's ready to go, that your QuickBooks is going to match what you need from a reporting standpoint, and also calculating your indirect rate. So we work with companies all the time and actually do a consulting engagement to sit down with the company and say, all right, what do you need your QuickBooks to look like? We'll talk a little bit more about that at the end. But we do recommend QuickBooks, how to set up your chart of accounts and all that, just to make it easier in the long run. Yeah.
Would the grant be considered a project of sorts? In this case, so if you have a project using the class function, everything goes into the grant buckets.
Yeah, I sometimes see the project function miss some of the things with the allocation. That's why I always recommend the classes, because if your chart accounts runs down and those are your direct labor, your direct materials, and you're going to have those in both all your grants and commercial work later on. So you want to make sure that you can put a direct labor across all of your classes is the goal. And with projects, it's harder to see that.
What's the dividing line between commercial versus grants? The grant bucket versus commercial bucket.
making money. So if you were gonna generate income, for real commercial income, that can be a cumulative bucket. You don't have to track those individually, but I do find lots of companies find it helpful in those early years to even be tracking your commercial products individually to know what they cost. It's just an easy way to make sure you're assigning your expenses across them as well, and it helps you in pricing in the long run towards commercialization. And the last thing I'll speak on, US GAAP is listed up there. That's a rule basis, pretty much. It means that you need to include expenses when you've incurred them, when they've actually happened, not when you get that invoice. If you have a subrecipient, you know that can be months and months later. That expense needs to be reported when the work was actually done. And that'll become important when you're thinking about your audit threshold. You need to know what expenses you incurred in any fiscal year in order to know if you've crossed an audit threshold. So keep that in mind. Start setting up QuickBooks. And if any of those questions, yep.
Sorry, still a little squishy between the grants and the commercial, the commercial being the generates revenue. But if the purpose of the grant, for example, so SBIR phase one, in this case over here, you come up with the prototype. That prototype becomes a sellable item. Where's the threshold for providing land between?
You'll probably have a contract associated even with that sellable item, or you should have a contract that defines the cost of then selling it on after, or are you selling it to the government? Where are you selling it to?
In this case, so here's the prototype. So the SBIR grants is just a grant in this case, no strings attached.
Okay.
So you have a sellable product at the end. Sellable product would go to whatever the customer is. So I was just squishy that between the grants.
Yeah.
The grant.
We see this sometimes when you actually produce the product, you then turn and sell. Is that? Yeah. So you still want to be able to track it as the grant because you need to know you incurred against the grant. But then you also going to have those costs because you want to designate the income you've made off of selling it separately when you shift that product into inventory.
Right, isn't that have nothing to do with? I guess that's the part. That has absolutely nothing to do with the grant whatsoever.
Nothing to do with grant, but what you do need to know and why it's separated is be able to allocate your cost functions. So you have to be able to allocate your indirect expenses, your fringe expenses across both your grant, commercial, marketing, research, all the different attributes. And if you don't have a classification for it, it's harder to do that.
Okay, I think I'm getting closer. But...
All right. All right, next we're going to talk about, that's very, very small, but I can tell you where it is. This is your federal compliance matrix. Most of the grants we deal with before profits end up in the Part 5.2 R&D bucket, the R&D cluster. It is important though that you actually go out to the federal compliance matrix and look for your ALN, used to be your CFDA number, to know which compliance terms are going to impact you. As you can see, most of them are going to be very common. Activities allowed, unallowable, allocable costs, cash management. Some grants don't have equipment, so even if it's on there and yes, but you don't have it, that's no longer applicable to you. Period performance is always going to be applicable. And then the one that we see when we get to procurement, suspension, and debarment, this is more about how you design your internal controls, which is really where all of these are going to lead to. When we start talking about internal controls, it's important to know what compliance terms matter to you so that you can turn around and create processes to make sure you're in compliance with every single one of the terms impacting your grant. So to do this, we typically recommend starting with a very simple flow chart. Just how am I going to handle expenses start to finish and meet all the requirements? Policies do need to be documented. They need to be in writing and formal before you hit phase 2. But I've even seen the DOE requesting them now early on with the budgeting process. So you do want to keep that in mind. As we go from the get-go, design your internal controls or just your general processes of how you're going to handle everything in order to start on the right step so that you're doing it all along through the entire timeline of the grant. And you're going to want to apply those processes consistently across all your grants, even if the compliance terms may change. Some things to think about with that. What we've listed is the procurement. We just talked about time and effort reporting is probably the biggest one. In the budgeting process, I also get a lot of questions of, do I have to be an employee myself in the company? The answer is usually yes, so keep that in mind as you go through the budgeting process. If for any reason you aren't going to be an employee of the entity that will have the grant, you need to talk about that during the budgeting process with the officer, so you're assigned to. A lot of times the answer is no, you have to be employed. So then you also have to think about how are you going to handle payroll taxes, W-2s, all of the stuff that comes along with that. So that's something during budgeting, the number of employees that you're planning on bringing on long-term, you're going to have to start thinking about. And then from a time and effort, how are you going to have those employees track their time? The NIH still puts out a Excel-based paper, pen and ink timesheet. That is baseline. It's very straightforward. It's by pay period. You have the employees filling out by hour where they've worked every single part of the day. And where this gets important is because then you have to take the total amount of money you pay them, divide it by the total hours they've worked, and then allocate it based on the hours by grant. This is very, very time intensive from an administrative standpoint, and it's very, very difficult to do it backwards. I've seen companies try. It's hard to remember what I did yesterday, much less 2 years ago. So have a time and effort policy in place, which tells your employees how often you want them reporting their time. Do you have a question?
Yeah, so what about the indirect employee coming from outsourcing? Say, well,
Or if it's like a consultant or an outsourced employee, you want to make sure you have some sort of agreement in place that states the approximate number of hours and their rate per hour. And then per whatever reporting period, if they're going to do an invoice, make sure it states the number of hours that they've worked by grant, because that's how you allocate it. All right. Other things to think about in your internal controls is you need to create some sort of segregation of duties, separating who is preparing to who is reviewing. That can be very, very difficult if it's a one-person show. And so there are some things we talked about is developing sort of a closing package where you're going through all of your expenses and you're reconciling it. You're doing a bank reconciliation every month. And that kind of creates sort of the internal controls you need, even if you don't have 2 people there to do it. Once you do get 2 people, that's when you can start dividing some of those controls. If you have staff on the engagement, they also need to know then, is something allowable on the grant? They need to have that information in the startup phase. So having those documented somewhere and you can hand them to them and saying, this is what we consider allowable expenses and who's going to approve them, so that that process from the get-go is handled. And keeping receipts. You'd be surprised how many times we get into an audit and just the lack of documentation creates an entire bucket of expenses that's considered a question cost, and you maybe ask them to pay that back. So from the get-go, and the funniest thing we always find is, like the little parking pass tickets that you get out, it's $3, $6, whatever. You don't have that one. That's a finding. And if they start showing more and more like that, we have to start accumulating them, and that creates an expense. So just keep that in mind. Then there's monitoring reconciliation. This is really your process. Where is the oversight? How are you going to monitor expenses? How are you going to tie them to what you're drawing down on the grant, and making sure that your QuickBooks, your bank statement, and your reports that you're filing to the NIH, DOE, wherever they're going, all are consistent and all match. That's really a review process, and you're going to want to actually manually sign off or have some process where that review's been done and completed, evidence of it. And that's all because when you get to an audit, we're going to ask for all that stuff. We're going to want to see those invoices. We're going to want to see timesheets. We're going to want to see how you approved every report that was went out. And so keeping a system from the get-go as you're developing your budget, knowing that you're going to have that all in place to start, is going to save you some pain in the long run. Yeah.
So as part of this, are you saying part of the audit is also basically the SOP, the standard operating procedures? So in this, I'm just comparing it for the manufacturing world, there's ISO 1000,
Yep.
which is basically the structure. If the records itself could be garbage, or what you're putting out could be garbage.
Oh, yeah.
But basically, it is the documentation of the process. That
Absolutely.
which, yeah, so that is part of the audit.
And flowchart, checklist, Excel spreadsheet, anything, they all count. It's documented, as long as you can tell and who's designated as an approved reviewer, where the source of the income is coming from, and how it ties to your expenditures. That's really the key. So lots of different formats are available to do that. And then lastly, when it does get to the audit, so it is based on your fiscal year. So if your company's year end is 9/30, that is then your year is ending 9/30. So you want to keep records and also track for your audit based on your fiscal year. Just keep that in mind. Okay. All right, let's talk about indirect rates. They're my favorite. All right, so for for-profit entities, it's under the FAR 31.2. For-profits are actually not applicable to what's considered the uniform guidance, that 2 CFR 200, which is always referenced. They sort of reference it. And I would say this is where communication and also the documentation that's put out from the federal agencies is not clear. So sometimes on how that indirect rate should be calculated and how it's going to be allocated does vary based on where you're finding your information. So we're going to go over the best way to do that. But you always want to make sure you're checking your grant policy statements on the specific agency site that you're working with. So when you go through the process in budgeting, it's really difficult to sort of devise what your indirect rates are going to be. You need to start thinking ahead to all the elements in that indirect rate that are then going to trigger expenses. Where the facility is going to be, how many employees are you going to have, payroll taxes associated with those employees. All of those things need to be taken into consideration in the budgeting period so that you can get paid for them as part of the grant later. One of the things I see commonly missed is you can have accountants in that bucket. So allocating some those grant funds into having an administrative assistant, either an outsourced grant administrator, someone in-house, someone to help you. Keep that in mind. It can be shifted up to about $10,000 per year. So it's worth thinking through all those things and just knowing as you're developing your budget. And also having your accounting system in place so that you can calculate your actual indirect rate once you get going. As a new company, it's going to change substantially the very first couple of years. Yeah.
What if, not using that service, or having to do that allocation, would you back?
Yes. Yeah. So, well, there's two parts to that. So a lot of people go right for the 40%. It's a really easy, it's a good way. It's a good starting point. And it's kind of the highest that they're going to award. We've seen that coming back a little bit last year or so, but it's worth always starting there, knowing that you probably are going to be below, because if you aren't spending it and your actual rate comes in less, you can reallocate those funds if they're under 25% to other uses. But it's better to have it than putting a rate too low. So it's good to know where your rate ends up and where you are as you go through the grant process, so that you can track funds, and if you can move them to other sources, you're battered. Oh. Are we not plugged in?
All right. Yeah, I'm sure.
Okay. The computer even got tired of direct rates. Okay. All right. So here is just a baseline calculation of how to do your indirect rates. So when we're setting up QuickBooks and you do a class for your fringe benefits, it actually is going to be very helpful, because you're going to designate your fringe expenses as a class. So your payroll taxes, PTO, holiday pay, those are important things. Separately on your P&L, your profit and loss statement by class is going to help make this process really fast and simple and be able to do that calculation timely. So you're going to want to look at all of your fringe expenses and take those over all of your total wages, and that develops your fringe rate. A lot of budgets, especially NIH, is going to give you a fringe rate and an F&A, G&A. They call it a number of things. The DOE usually doesn't do a fringe rate. They'll sometimes include it with your direct salaries budgeted, but then they'll usually call their overhead rate or G&A, or they different names every which way. It's all the same thing. Then you're going to figure out what your G&A is, and you want to make sure that you're actually applying your fringe rate to your G&A salaries. They need to have an allocation of those costs as well. It's sort of a pie. You want everything allocated across all cost pools, and this is one of those areas. And then any other G&A expenses, and this could include all of your admin salaries, if your IT supplies, office stuff, anything that you need to sort of run the company falls in that G&A bucket. Then you're going to want to take it's your G&A pool, and you're going to want to take it over your expected direct costs. This is everything that lands in that project or the class buckets for your grants. The two things that do need to come out are your subrecipients. So you get $25,000 included up in that base for the first year of the grant. And then also your equipment is usually excluded. The easiest way to know whether or not it is in your notice of award. Towards the very end of it, there's actually a schedule that tells you what the base is for your rate, and it will include whether or not the subrecipients are included, if there's other costs, material, something that's other excluded, but it'll tell you what's in that base. You'll also want to think about that in the budget process of what you want to apply your fringe and G&A rates to as you're developing your budget. So with all that said, it's just your G&A total expenditures over your base pool to come up with your G&A rate. 65 is generous. I would say that the first years I typically see more like 24-ish, 25, somewhere in that realm. So just to your point, if you went in for 40%, you can only then take 25% allocated. You can't just take the 40 because you didn't incur it. And that goes back to the primary principle, is you can only be reimbursed for expenses you incurred. You didn't incur more than 25%. So you just have to watch out for that. So that's why I recommend doing this quick calculation monthly in the first sort of year of the grant, just to get a feel for it, and also make sure that you're taking as much as you can in indirects and fringe as the grant proceeds, because you can claim it month by month. And then look at it in total for the whole year and make sure that you've not exceeded your action for the year. So it's a little bit of tricky math, but it will prevent you from either overdrawing on your allocated expenses or not drawing enough. I see it more often that people are leaving it on the table and then not being able to draw it down. All right, let's talk audit. So an audit is triggered, like we talked about, in your fiscal year if you exceeded in 2025, just changed to $1 million in expenditures. That's when you're going to look at your direct expenses plus your fringe and your overhead. And if that is $1 million on the penny, you are subject to audit. If it's 1 penny under, you are not. So this is why it's so important to be tracking your expenditures across the year, because if you get to the end of the year and you don't have to incur something or can slow the process to fall under that audit threshold, it's a good idea. We're expensive and we're kind of a pain. So, all right, and make sure you're also doing that. We talked about a GAAP basis earlier. Make sure it's on an accrual basis. And this is why. All right, we have 2 types of audits. We have a program-specific audit and we have a single audit. They are referred to by the, when you get a notice, they'll say single audit usually. It can be either one. You just have to get pre-approval for the program-specific audit. And why that is important is they are significantly less expensive. They range between $15,000 to $17,000. We've come down on a few of them if you have even fewer transactions. We're always happy to work with you to lower that. We know you're working on the science and don't want to be paying for an audit. But if you trigger into the single audit, that means we are auditing your full company-wide financial statements. We are looking at all the transactions. And there's a lot of stuff in new companies that can be tricky from that standpoint. If you've had debt and equity transactions, stock comp, if you've gotten a safe, these are the things that can make that process a lot more painful than maybe you were thinking it was going to be. So the goal is to know that you can do a program specific. There's a couple of criteria. You can only do program specific if all of your grant expenditures are from one single agency. They're all from the NIH. They're all R&D cluster group funds. If you have an NIH and a DOE or an NSF, it automatically triggers a single audit regardless if the NIH doesn't actually require it. So keep that in mind. I know that's been a point of confusion on a number of clients of not thinking they were required to, but they triggered one just by having multiple agencies. Yeah.
So, based off of this, well, SBIR phase 1 actually, potentially trigger a program specific audit.
Yeah.
And that's looking like about a 10% chunkish.
Yeah.
That's, so this kind of,
Yeah, that's
if,
why.
if you're awarded, this is part of the cost of entry, I guess.
But it's good to know it up front rather than finding out when you get there and get surprised with it. Also getting a single audit, those start around 35,000 usually. So they escalate very quickly. So just keep that in mind. Timing wise too, program specific audits took us 5 days. Pretty quick turnaround. It's a very simple report. To focus solely on your scheduled expenditures of federal awards, your CFA, and your policies and compliance to that, versus full set of financial notes and everything. So it is a big difference in time and energy. And the whole goal is to avoid findings. So this year, we always like to keep it on our board. So what we see the most common, not calculating your own internal indirect rates and just using that 40. It is the most costly and #1 finding we get every year. If you don't have supporting documentation, missing receipts, if you used credit cards and you're not keeping the supporting invoices for those credit card purchases, We see that regularly. No timesheets or not using any timekeeping. Level of effort percentage doesn't work for for-profit entities. So you can't just be like, I work 20%. That won't fly when it's a for-profit entity. Just keep that in mind. We see late audit reports all the time. They're due 9 months after your fiscal year end. Most of us have a 12/31. They're due September, by the end of September. So keep that in mind. And we try, but we cannot do them in a day. So plan your audits. Start thinking about that February, March timeframe of when you want to get audits completed. And then just lack of general documentation around internal controls and things we talked about. So I'm going to turn this over to my colleague here in just a second, but before I wander, any questions on grant administration?
About the salary determined, that can help me decide that. I was like, is that guideline based on the grant? I was like,
Yeah, we see that a lot. So it's really important. So doing some market research to kind of find out for that role, general range of what salaries are, and then having an employment agreement place that sets, especially for a founder, PI, that individual, there is a set salary in place as you get started. And that will help because then you'll consistently apply that for all budgets. And it does not have to be, I'd say go higher than maybe you think, because you can always get capped to be lower as far as your rate applied on the grants. But then if you go into commercial or you're going in for a contract, DoD awards big contracts, you want a rate that you're going to be able to get additional funding from. Okay. And I'm sure you've all seen this. AI is definitely changing our industry substantially, how we do our audits. And so I'm going to let Chris kind of talk just a few things about how we've seen clients using this effectively as well.
All right, thank you, Lauren. Hi everyone, my name is Chris Williams, and I've had the opportunity to work with Lauren for the last 5 years on the non-for-profit or for-profit grant side. So hopefully we're going to deliver some great insights today on how AI is transforming accounting and especially federal grant management. So grant administration and grant management can be tricky. Depending on the federal agency and the type of grant, the compliance requirements can be different and pretty nuanced, but each compliance requirement is just as important as the other. So you really can't overlook any of these. And some ways that we're seeing companies bridge this knowledge gap is through AI. Now, show of hands, how many of you are already using AI today within your company? Okay, awesome, a lot of people. And for those of you who are not, today is your lucky day, because we're going to talk about some ways that you can use AI today to better manage federal grants and honestly your accounting system as a whole. And then on the flip side of that, we're going to talk about how we as auditors at EisnerAmper are using AI to better serve you as our clients. All right, now let's talk about why AI matters for grant. Typically from our perspective, a lot of the companies we work with are focusing on pretty complex R&D, and they have a very lean finance team. And by lean finance team, I mean it's just the CEO or maybe a few people. How many people in here are in that situation? Yeah. This is where AI will really come in as a force multiplier for you. You do not want to be bogged down in the finance and accounting role, taking away from the actual business. When you're able to use AI to monitor your spending, ensure you're in compliance, essentially have an extra set of eyes and hands on things, that's going to free you up to do the real purpose of the business, which is whatever that may be. I know it's not the accounting and finance role. So what are some ways companies are using AI to help manage grants today? I'm going to go a little bit out of order and start at the very bottom. You'll see why the structure makes sense. Document review and automation. Natural language processing tools built into Copilot, Claude, ChatGPT. All of these things, if you upload a contract agreement, whatever it may be, it can help you pull out any of those compliance requirements. Anything you want to analyze in that document, go ahead and upload the notice of award to it. Lauren and I have read many notice of awards. That does not mean that they're easy to read. We understand what to look for because we've looked at hundreds of them. On the flip side, if you haven't looked at it very often, it can be pretty confusing, but nonetheless, you have to understand every compliance requirement in it. Like I said, each one is very important and they can change depending on the grant and the federal agency. And then depending on the type of grant, they can be nuanced with specific requirements. So it's really important to upload that special terms and conditions into some type of natural language processing tool to understand. And once you understand the compliance requirements of your specific grant, now you can start training an AI to do more work, such as allowable versus unallowable cost classification. I'm going to make an assumption here that most people in this room do not like reading long wordy agreements and classifying costs on your general ledger. Is that a pretty safe assumption? Yeah. So AI can really help with this. And when you're able to train an AI based on specific parameters versus what's allowable versus unallowable, and then you're just reviewing that work, that's freeing you up to do so much more with your time. And once you have an appropriate allowable versus unallowable cost classification, this is where you can do an accurate budget. So a lot of the findings that Lauren spoke about are because people did not have an understanding of the compliance requirements, which lead to an inaccurate budget and inaccurate cost classifications. And all of these things build and become more pervasive because by the time it's an audit, it's usually many months later, you're in the next budgeting period. So those issues are leading into the next period or however many periods have gone through with you not having an audit. So once you're able to actually monitor your budget, this will lead into more appropriate indirect costs, fringe rate, burn rates, those things so you can monitor your expenses so you can ensure that you're not going to cross the threshold to trigger an you're not really ready for that moment. And there's many other ways that you can use AI, but I just know that these are 4 ways that you can start today. If you haven't, go home and put a contractor agreement into the AI, have it pull out some requirements or have it pull out some of the terms and conditions just to see what it can do. I mean, even an earlier step than that, just go in and start talking to it to get more comfortable with it, because it's going to be one of those things where when the internet came out, you didn't want to be the person who wasn't exploring with that. And you see where we're at today. So it's going to be the same thing with AI in accounting. So on the flip side, let's talk about how we as auditors are using AI to better serve our clients. And this is the stuff that really excites me because a lot of the time, the data that you have on your end may work for your systems, but when it gets to us, a lot of the time it's not in a usable format. We have to format that data to mesh with our accounting systems. And a lot of the time that takes time depending on the data. So if you have data that is not very clean, we have to format that so we can work with it. We still want to work with you. We're not going to say no if you don't have clean data, but this is going to take away from the actual work we're doing. If we're bogged down in formatting the data, that's taking away from the actual audit. It's taking away from insights that we can offer you as one of our clients. So when we get a general ledger, we're usually analyzing the full general ledger. We're looking at all the journal entries, identifying anomalies, and a lot of the time this is by hand. Now we're able to use AI to do this rapidly. We get the policies and procedures from you. We're able to extract all the key compliance requirements that we know we have to audit very rapidly. And this takes, seconds and minutes now compared to hours or days before. And like I mentioned, more time serving our clients, less time crunching data. Because when we're bogged down in crunching data, we cannot offer you good insights on the data that you may expect. Because when we have an audit, we have a specific scope of the audit. And when we identify things that are out of scope, if we don't have time, we can't really dig into that. We can let you know that something looks strange, but when we're freed up to really explore your financials, we can offer much better insights into what we're seeing. So what this means for SBIR and STTR companies receiving grants such as yourselves, they're going to have stronger grant compliance because you're understanding the compliance requirements from the start and you're using AI to help implement them and monitor and track as you go. So by the time you get to an audit, there's much less findings and your audit can be very smooth. Lauren said these audits can take 5 days or more, but if your data is not well formatted, these things can take months or years depending on the client side of things. And that's the last thing you want as an audit to drag on for a year plus. That sounds like a very scary thing. Third, better use of your lean finance teams. Having that dollar stretch for a year, you have an extra set of eyes and hands on things. At the same time, you want to use AI like an employee. You would never have an employee running unchecked. You obviously want to check the work that it's doing, but the whole point is to free you up. You're not the one doing this initially. You're just reviewing the work as it comes in every day, week, or however often you're going to review this. Lastly, like I said, human judgment stays simple. You're gonna stay as the main reviewer of this. You're not gonna let the stuff go unchecked. And lastly, three key takeaways that I want you all to have today. AI is transforming grant management. No longer are you doing this alone. Like I said, lean finance teams are now using AI to be a large force multiplier, and they're able to get a lot more done with fewer people. We're able to deliver more value as auditors. Like I said, we're not bogged down in a lot of the technical things that we were before. This is opening our time up to serve you much better. And lastly, start focused and scale over time. Take the small, meaningful steps now so it's not such a great leap in the future. Like I said, start playing with AI today if you haven't, because you don't want to be behind the learning curve of all of this. It's very new and it's very exciting, and this is a great time to start digging your hands into it. All right, and that brings us to the end of our presentation. Lauren and I are always available to help. We're happy to talk through any grant requirements, financial, accounting needs, whatever it may be. And as Lauren mentioned earlier, we do offer a 4-hour consulting engagement where we can explore the requirements of your notice of award, walk through internal controls, maybe even explore how you can implement AI within your company to better ensure grant compliance. All right, well, yes, thank you all for your time today. I appreciate you guys having me here today.
One question.
Yeah.
Yeah, I had a question. So you do any reverse engineering with this where, you know this way you're gonna audit, so you can help the client put the information the way you want it.
Yes.
So once it gets to you, it's much cleaner.
Absolutely. It's
Okay.
usually a reiterative process. So we'll work with clients, we'll audit them 1 year and it may not be very clean, but by the second or third year, we have a much cleaner audit. Yeah.
And a quick follow-up, I know you stayed away from, okay, how do you actually do it, right? So, is it, you plug AI into your QuickBooks, or do you just go for an agent completely and just?
Okay, yeah, great question. So I'm sure there's ways that you can integrate your AI into QuickBooks, but let's say for this cost classification, if you have a file where you're storing all of your invoices and you have a special AI agent that you have created where you're just having it analyze allowable versus unallowable cost classification based on parameters that you've trained it. Now you're uploading these invoices, PDF scans into the AI, and it's documenting what cost is allowable, unallowable, whatever classification it may need to be, and then you're reviewing this afterwards. That's just one quick way you can do it. And then once you're having these cost classifications appropriate, you can build your budget and implement an AI to kind of track your spending on that budget to identify, oh, if we have this cost, we're going to go over on our indirect rate, whatever it may be. There's very different ways, but that's why I'm saying you need to get in there yourself, start playing with it and see how it can work for your company, because there's many different ways to implement it, but it's going to be specific to each one of you. Yeah.
So what you're saying is you're not going ahead and prompt-based auto reconciling auto reconciling and making general ledger entries.
No, so I would say you always have to be the review over that. Have it put out what it should do, and then you review and say, okay, this is what we're going to do, and then put it into your accounting system. Absolutely. Yeah. Any more questions? Yes.
Just a side note on the allowable, unallowable, if the prompt includes the NIH grant policy statement, it will automatically to the specific items of your grant.
All right, thank you all.
This was our time for a 15 or so minute break, so we'll be back, I guess, around 2:40, and a great talk by Kirk and Feldspar. So thank you, everyone. And I'm at 2:30, sorry. Yeah. It's better, you have to have budget for the whole, say it's a phase one, or it's 300,000. For a subcontractor, that is part of your commission. And then for his help, you know, there are some rules that you can't just have. So break down limits. You can make it over, and you can have a percent of that. It's like 7%. You can go to yeah. Right, it's a projection, so that's what the other job is. Yeah, you say you don't think you're gonna spend 50,000 on some volume, and you spend 30,000. And justify. But you can only be off by so much. You can't say like, oh, you've got 100,000 big costs. It's actually also. And it's always harder to ask for more. For some reason, you know, like so particular things you could these. So, you know, you want to be as close as you can. Hey, so we try to yes. No, I don't know. Yeah. So we that because for everyone that registered last week. I don't know. I don't think we have emails. Nice to meet the person here. Because she's doing a simple series. Okay. You're presenting the first time. I'm here outside. Yeah, my wife was like kind of tired. I looked around, I didn't have to go out this car. There were no money on holiday. They were actually part of the car. But also needs to I think that is. Yes, also. Sales are just actually people, I guess, yeah. Yeah. So we all have great. So again, yeah, they're all Canada, you have is there any special like don't give a lot of this. That's exciting. Because I've been here. Basically, I was listening and I was I was gonna say there's a lot. Yeah, had some interesting things. So actually, it's my most favorite is recently. So I'm feeling fine. Yeah, so I kind of came down here before that. Basically, from that. I did actually some. So I'm an engineer. Standard process. Doing the back of the year. For now. It's not your own favorite. What's that? You know, our goal was to stay there. Yeah. You never know. So she was presidency. Yeah. Her office and. Fellowships, one or two like surgeons, she is actually interested, but you don't need a fellowship, you can do surgeons. Residency. She will be going 2 years. If she wants to stay and get out of this, she likes kind of, well, it was her nominee choice. She had research to do. You know, she can stay. They're trying to continue to expand here. I don't know, especially to work. Yeah, anywhere you go, like, aren't you? Yeah, so sorry, it was an initial. So, yeah, so it was here for a long time. Can you do administrative first? Yeah, I don't know. I don't see that happening like that. He must be swapped now. So let's start out again. I don't know if there's any. Yeah. Feel good. Right. Yeah, I go still do actually. You just. That's no, it's different. One of the big things I can I've been on okay, so yeah, specialist. So I'm just checking. Yes, I have kind of an office. But we help clients. Yeah, we would help with it. If there is like a yeah, you get some that's just stay with you. If you put your vice versa. I have actually done that. Let's see, that so I would call it you to go to clerk. Yeah, I can't like usually I'm like, I work with clerk. I mean, here's this 2 other people that have those chairs. So that it's most sandwiches. So you don't have to get out. No, we always. Okay. Last year. I know I just see you like so. It's not actually. I mean, there was that. Obviously, last year. Oh, wow. And but I have one of those I try to No, they were getting so long. We'll find also. Yeah. So generally, no, opposite was like that. And that's why I'm they're just too early. You got the following. Especially if I yeah. Decide. Help you. So much, yeah, unfortunately, it's not my Oh, yeah, so I can send it out. Everybody is very subject. So this guy. You know, as running the six. Here, so you in chat, you should couple yeah, and I'm sorry to say, I'm not just finding some things. That's how yeah, maybe one. One degree. So folks, started in 1 more minute. Thank you. Someone's good at whistling. Thank you for coming back, everyone. Glad to see all the good conversations, and we'll have time afterwards to keep chatting. So I did want to give our next speaker, Kirk, his full allotted time, because he is probably one of the, I don't know, best people in terms of this topic, in terms of SBIR, is probably certainly on the Mount Rushmore of people. So certainly hope you have a lot of good questions, and pay attention and grab your notes. And I guess follow him on LinkedIn. He's a very avid poster and always has great advice. So I guess I'll just let Kirk maybe do his own introduction, and Kirk from IntelliSpark.
Thanks, Steve.
Yeah.
So my name is Kirk Macklin.
Oh, and I'm sorry, that might not work, but I will get to the
Okay, so my name is Kirk McLean. I run a company called SBIR, and
that's it.
So I spent the last 25 years helping companies win SBIR STTRs. I've got 800 plus funded projects, a little over $500,000. Last year we had 88 companies we got funding for, worth a little over $95 million. And lots of them have gone on to have great exits. My understanding is you got the basics of SBIR, phase 1, phase 2, and all that stuff, so I'm not going to waste any time with that. I'm actually a semi-new North Carolinian, or Carolinian, how do you say it? I don't really know. I just moved out from New York 2 years ago. We have worked with a bunch of companies in North Carolina who've got funding, and some of them. Okay, so what I'm going to tell you is how do you win SBIRs? And simplest way I can say it's just like this. You have two jobs. The most important one is don't swing at bad pitches. And I guarantee, I've given 100 of these talks over the years. I guarantee that at least one person has as close to 0% chance of winning a proposal in this room. There always is. Understand that these things are funding incredibly high risk things. They're incredibly competitive, and they're not going to fund time and money problems. They're going to fund things that have a lot of technical risk. So if you're just doing basic engineering, your chance of getting funded is close to zero. And so you want to make sure that you're actually a good candidate. Otherwise, you're taking resources from your company and you're hurting yourself. Secondly, hit the ball really hard every single time. This is super competitive. It's not a quality game. It's not a quantity game. It's a quality game. People who actually win these put an incredible amount of effort into every one of these projects. You can't spend 10 hours on a proposal. You can't go to the clod and win that way. It's never going to work. You're wasting your time. Don't do it. Okay. So let's start with don't swing at bad pitches. Okay, this is not an SBIR example, but I always use it because it's amazing. So in 2010, right after the financial crisis, Congress was throwing money around left and right. And one of the things they did was create this thing called NIH Challenge Grant. Gave NIH $200 million. And they said, go fund 200 projects, $1 million each on anything health related under the sun. At the same time, we gave the Department of Defense $100 million and said, go do the same thing. And what NIH did was they publicized the hell out of it. They had webinars, they were putting out plastic out, they did a road tour. The DoD didn't tell anybody. They just published it on the one website they're required to. And so what happened was within a couple of weeks, literally everyone I knew was talking about challenge grants. Like any professor, anyone in a startup, put it aside and I wasn't doing any challenge grants. Nobody was talking about the DoD. So what happened? NIH got 24,000 applications for the 200 awards, and the DoD got 800 applications for their 100 awards. Now, in case you're not clear on this, There is no reality where it makes any sense to be one of 24,000 competing for 200 awards. People always get excited about the amount of money they can win and how much money the agency is giving away. Well, that's the numerator. Far more important is the denominator. So Powerball is giving away $100 million this week too. Are any of you guys putting your company's funds in Powerball? Probably not. Why? Because you have no chance of winning. Same principles rely here. Okay, so you go to the SBIR, you have 11 different agencies. 5 big ones. They account for almost all the money. They have SBIRs, they have STTRs. You got the 6 small ones, they're less than 5% of the total budget. Only the USDA of the small ones actually has an STTR program. And so the first thing to understand is everything about every one of these agencies is different. So if you have a colleague and you're like, oh, I want an NSF proposal, and you're like going for an NI proposal, whatever advice they give you is wrong because they're completely unique individual programs. Everything is different. Kind of money they give away, what they fund, how they review them, their timing, proposal formats, it's all completely unique. And so what you need to figure out is where you match up well with it. And further, even not only the 11 different agencies unique, many of these agencies are further broken down. If we go to the Department of Defense, well, the Department of Defense has the Army, the Navy, DARPA, Air Force. Okay, go one more layer deep. What about the Navy? The Navy has the Office of Naval Research, has SBIR, and Marine Corps Command. So at every level, they're adding more differentiation about what they fund, how they fund, what makes them competitive. So, and then in general, again, 95+% of the money is in those 5 large agencies. The 6 small agencies tend to have smaller awards, less funds, and usually relatively low success rates because people don't understand how small they are in the big scheme of things. And so in general, you want to figure out how to make one of the 5 bigger agencies interested in what you're doing. I'm not saying they don't get USDA and EPA awards, but they're just much more challenging to get and much smaller. All right. So first thing you have to do is match up with an agency. And agencies are required by law to publish topics. But what a topic is dramatically different. And there's a whole spectrum of how agencies view the world. They range from open topics to very closed topics. So the classic example of closed topics, Department of Defense, they'll say, I want to fund a battery, okay? It has to have the following weight, the following engine density, the following cycle life. They give you very detailed specs on what they want. What's great about that is if you're actually a good candidate for it, there's a smaller number of companies who actually can compete for that topic. And if you're successful, the reason the specs are so tight is because they actually want to buy that. And so you could be creating a customer at the same time. Okay, other end of the spectrum, classic example, National Science Foundation, they fund anything and everything. So they would just say, energy storage technologies, end of topic, that's it. And so it's up to you to go to them and say, this is the case, what I'm doing is important, there's a high-tech risk. Now, the advantage there is super easy to fit into a topic. And so whereas the DoD, you might wait years for the right topic, you can always go to NSF, but in NSF, you're competing against all technologies. And so you might have the best battery, but are you better than the new X-ray machine? Maybe you are, maybe you aren't. So it changes the competitive dynamic. I'm going to talk a little bit about 4 of the larger agencies. We're talking about deadlines first. Okay, so this is what a normal world looks like. In case you haven't been watching the news, you don't live in a normal world. Okay, so, but in general, fiscal year starts in October. Between October and roughly April, normally, the bulk of the proposals are due. And so this is actually a good time of year to start thinking about SBIRs because that window is sort of heading towards that process. And then typically between May and September is when the bulk of the awards are actually issued. So if you actually look at how the government spends its money, it tends to wait till near the end of the fiscal year to actually hand out awards. Now, obviously, this is a super abnormal award. I don't know how much you covered the reauthorization and how it's just starting out. Okay, so obviously, Oregon was shut down for months and months and months. agencies are just creeping back to life. Many of them still haven't said anything. Some of them, like the Department of Energy, have been dysfunctional since last January, regardless. And so there's a lot of uncertainty on how it's going to play out. But once it gets back to the normal world, this is probably what things look like. Okay. So there's nothing more important. I think most people worry about what they write far more than being in the best opportunity. So if you're in the 10% bucket and I find a way to put you in the 30% bucket, your odds of winning, everything just gets so much easier. And so people generally will gravitate to the most obvious place, which is seldom the best place. And I'm going to talk to some of the ways that you figure out where to go, and how to maybe prevent yourself from walking into very low probability situations. And again, it's all about like picking things you can win. Like there'll be literally years where, let's say, at a part of NIH, because the budget is broken down by institutes, some of the small institutes have literally no money to spend on new projects. Yet 20, 30, 40 people put in a new project. So guess what their chance of winning is before they even started? 0. And so you have to make sure you can actually have a chance of winning before you even start the process. Okay. Obviously, people, yes.
So on given that opportunity though, how do you tell how many solicitors you have? That's not public information.
It's not public information, but I'll talk a little bit about some of the ways that you actually sort of ascertain some of that. Okay. Yeah, people go to the obvious place. It's not obvious. I do want to talk about overlap. So in many cases, you'll discover that you can submit proposals to multiple places. So let's say I'm doing a medical device today. I know I can submit that to NSF at the end of July. I can submit it to NIH in September. Both are possibilities. And in that situation, you really have a couple of different approaches. You could pick one of them, which I wouldn't do because that's stupid. You could pick both of them. But if you pick both of them, the question is how do you handle that? So option 1 is what I call 2 shots on goal. Take the exact same project, then write it to NSF, send it to NIH, so you have to write them dramatically different because they're very different agencies. Whoever wants to fund it, you take their money. If they both want to fund it and you accept both of their money, you will go to prison, so don't do that. Or alternatively, you can basically split your project and say, okay, I'm going to do this part of the work here and do this part of the work there. And in that case, you can accept both piles of money. However, it's incredibly easy to take one good project and split it into 2 piles of crap that are both unfundable. And so particularly if you're very early stage, and generally in an event like this, everyone is very early stage. If you split your project, reviewers will look at it and say, hey, wait a minute, there's these parts you're not working on. And you can't say, well, I'm hoping somebody else gives me money to cover that. And so what you'll discover is that 2 shots on goal removes the second bucket of money option, at least in the short term. But it increases your overall chance to get funded. Splitting often, what it will do is you have a chance to win 2 piles of money, but your overall chance of getting funding actually goes down pretty dramatically. Now, there are some companies that split pretty well, but they're usually more advanced and lots of data.
Do you have to disclose, like if you're applying to one agency, do you have to disclose?
Yeah, so when you submit, most of the agencies will ask you at submission, like, has this been submitted elsewhere? More importantly, right before they have funded, they'll ask you again. And they'll also have you sign a form saying that you will notify them if this is funded by somewhere else. And people have gone to prison for double dipping, so don't do it. Okay. And then the other thing I want to say is, agencies are all very different. They recruit reviewers in very different ways. So let's say again, focus on medical device example. NIH, largest cohort of reviewers are academics. And in the medical space, they'll skew heavily towards clinicians. So you're talking about a doctor from UNC or Duke who's going to be your reviewer. If I send that same project to NSF, largest cohort of reviewers is prior SBIR awardees. And in the medical space, they'll skew towards the medical engineering side. So if I take a biomedical engineer from a startup, and an academic physician, they view the world very differently. And so you'd write those grants very differently because the features that appeal to them are very different. And so, again, your same example, on the NSF side, I'm going to heavily skew the engineering aspects of the device. On the NIH side, I'm going to heavily skew the animal model that I tested in because that's going to be more interesting to people. So you have to, even though you're doing the exact same work, the time that you spend in the proposal talking about it will be dramatically different. So I like to say, like, how you spend your money is not how you spend your words. Make sure you're spending your words to actually match your audience, not just to talk about what you're doing. Okay, let's start with NSF. For most people, NSF is your first step. One, you can always fit into their topic space. They're very startup friendly. They are the only agency that really takes a concerted effort not to fund the same companies over and over again. So if you win a phase 1 and you win a phase 2 of NSF, they will never fund you again. You're done. You can go to NIH 100 times, you can go to the DoD 1,000 times, they'll keep funding you. NSF will not. They like brand new startups. They like brand new companies. But most importantly, they like lots and lots and lots of technical risk. And so you have to have projects where you can plausibly make the case that this might not even work. At the same time, you have to have enough preliminary data to say it's actually plausible that it might. Okay, so their process, you put in a 2-page project pitch. That's reviewed by the program officer. You submit a full proposal. You wait around. If they like it, you'll get an email from the program officer saying, here's 50 questions. I need answers in 3 days. Guaranteed the least convenient moment in your life. And then 2 months after that, you get an award. So, project pitch. Last year, the NSF got 19,000 project pitches. Well, I should say 19,000 project pitches were initiated. Only 10,000 were actually submitted, which is weird in its own way. Of those, let's say 5,000 of them get accepted. Turns into about 3,000 phase 1 proposals. They gave out a little over 200 phase 1 awards. They gave out a little over 107 phase 2 awards. So, of the 10,000 people who actually submitted the project pitch, about 100 will get to a phase 2. And let me also just say this. If you're doing this, and you don't win a phase 2, whatever you're doing doesn't matter. If you're doing anything hard enough to be interesting for an SBIR, you cannot make meaningful progress for the phase 1. You have to win a phase 2. And so, what am I telling you? 10,000 people think they can win, get a phase 2, and 100 actually can, 1%. So, be hard on yourself, find people around you who will be hard on you to actually make sure you're actually the kind of quality you're looking for. Like, if you are, I don't know, a very medium, I don't want to college, how about Eastern Carolina, don't apply to MIT, you're not getting in, all right? Same situation in life here, okay. Okay, so that's the process. Okay, pitches. Project pitches are killed for lack of technical risk. That's the #1 reason. And once in a while, it'll be because, I'd also say the other extreme, you just have an idea. So no agency funds ideas, they fund technologies. And so whatever brilliant idea you have doesn't matter. If you don't have built a little bit of prototype, have some data, found some way to sort of de-risk it a little bit, you're not getting funded. And also NSF doesn't like excessive prior funding. So if you've raised $10 million, NSF's going to say, how does our $300,000 phase 1 move the needle? It doesn't. They're not interested. And so what's unique about NSF is virtually all the program managers are actually people from startups. None of the agencies actually outside of NSF thought, maybe we should put people from startups in our startup program. But they have. And so they want to make sure they're being impactful and they're moving the needle. Generally, they love university spinouts. You guys know what I4 is? Some of you don't have it. If you're a university company and you can do even just a regional I4, do it. NSF loves that. It's not necessarily the act of doing it, it's the customer discovery that you do, it'll show up in what you're doing. But it does give you a little bit of third-party validation to say, hey, I've gone through I-4, you know I've done this process. If you, part of it, yes.
Oh, if you go a little bit more into I-4, I think it just
Okay,
came
yes.
up briefly for we could go day one, and so it involves customer discovery.
Yes, okay,
Yeah.
so I-4 is a program run by NSF. It's generally limited to people who have some kind of university pedigree, technology come from that. Though some of the I-Core hubs will run a short course, which is open to anybody. Basically what it is an organized custom discovery process. So about 15 years ago, NSF woke up one day and said, you know what, our SBIR program sucks. And because they're funding a bunch of PhDs making better mousetraps than nobody wanted. And so that what started the I-Core process. And so there's different variations. The regional course, usually you do 30 customer interviews. The national one, you're gonna do 100 customer interviews to make sure you're actually filling what people actually want. And so the thing about NSF is they love tech risk, they hate business risk. So like if you're making something and you don't know who can use it, that's not a great story for them. They want you to understand, like, okay, I have a problem, I have a hard technical risk to solve, but I actually have a good idea who would actually use this if I actually solve my problem. And the point about third-party validation is in that 2-page project pitch again. So last week, in 2 days, NSF got 2,000 project pitches. There's 10 program officers, because each one of them got 200 project pitches. So 200 times 2 pages, 400 pages of stuff for them to read. If your project pitch quickly says in the first paragraph, technology developed at Duke, and we've gone through the I-Core process. All right, click, check the boxes. It's probably good technology, I can move on. So the faster you can tell someone who has to screen quickly that this is interesting, the better chance you're gonna have. It's just like a resume. If you don't give them a reason to like it in the first 10 seconds, they're not gonna read the whole thing. Okay, topics. So on the right side, you have NSF's topics. And they kind of cover everything. And in each side, each topic, they have a bunch of subtopics. And one important thing is the last subtopic is always other or whatever the topic is. So, and then more importantly, if you look right in there, the topic called other topics. And so what they're really saying is, we will fund any technology that you bring us. You make the case of why it's interesting, important, and necessary. And so you never have to worry about, like, can I find a proper pitch? Now this is basically how NSF's 207 or so phase one broke down by topic area. It does differ year to year, and it's an evolving program. You're competing against everybody. One of the interesting, some surprises in here though. So if you look in the top right about 1 o'clock, AI, there's actually 7 projects funded in the AI space. My guess is they probably got 3,000 pitches on AI, if not more. And so, some areas are becoming harder and harder to differentiate yourself. The competitive bar is not equal in all places, and this is true across the board. So, like if I go to, say, NIH, if I'm doing a cancer drug, it's way harder to get it funded than an Alzheimer's drug, just because the competitive bars is very different there. And so, one of the surprising things though is that 3 of the biggest slices: biomedical technologies, biological technologies, and medical devices. And this is why a lot of people who go to NIH will often go to NSF. NSF is more likely to take early stage risk. NIH is less likely to take early stage risk, again, because the reviewers are all academics and they want to see that you've almost done the grant before you've actually done it. And so in many cases, for early stage companies, NSF is a better match for a lot of companies, but the bar is super competitive. I'd also say that, like, it's not helped that in my industry, there are a bunch of companies who are not honest with their clients. And they'll basically tell them they can win when they can't win, and because they can fit anybody into NSF, they just funnel lots of people with project pitch to NSF, who have no chance of getting one. Okay, NIH. If any of you are academics, the NIH process looks a lot like it does on the academic side. And this is NIH's diagram. It's also a lie in many ways about timing. So basically what happens is you have an idea, you make sure you're eligible, you submit your proposal, it gets signed through a review group. Now, NIH is a two-tiered process. There's a review panel who actually reviews it. There's an institute who funds it. The review panels are shared across all the institutes. And so, but then what those results mean depends upon where it's going. I'll get that in a second. So you see the signed review group, merits. They talk about an advisory council review board. That's largely not that relevant to you. Stuff just kind of happens behind the scene. So they say like 1 to 2 months, 3 months, 3 to 4 months. NIH grants can take up to 15 to 16 months to get funded in many cases, depends on when you submit. So 3 deadlines a year, April, September, January. Generally, virtually all their grants get funded in the summertime. I'll get to that in a second. So no matter when you submit it, it's going to get funded the following summer. Okay, so back to the two-step process. You have the review panel and the institute. First of all, this is a lot like on the academic side. You have review panels, but there's important differences. So one, the panels are a lot broader than what you're used to if you're an academic. So on the academic side, NIH convenes 206 or 204 different panels that cover the domain of life science. On the SBIR side is only 35, which means each panel is covering 7 times the domain, which means the expert panel that you think is an expert is not really an expert. They're just kind of in your zip code. They're not going to get on your street. They definitely don't live in your house. Unlike academic grants, they do not get percentiles. So basically, you get a score. So NIH scoring system, basically, projects come in, the bottom half doesn't get a score, top half gets a score. Best score is a 10, worst score is a 90, don't ask me why, but in practice, they run from the high teens to the mid 50s, and usually trying to get 30 or below. Now, what that score means depends upon the institute you're getting assigned to. So one institute might be funding everything 35 and below, and one might be funding everything 24 and below. And if you actually have the option of choosing between the two, and you chose wrong, well, that's not great for you, and I'll get to that in a second. So I kind of covered this a little before. Pre-proposal, pre-recipient lead, panel meets. Oh, one new thing. So this last mission, which was actually last September, because it's been a million years, they added a new category called competitive not discussed. And so in the past, they would talk about the top half of projects and score them. They only talked about the top 30%. And that's because the volume growth has gone up so high, and it's hard to recruit reviewers. The assumption is the original plan was that was a one-time thing. Given the volume that's going to come in September, there's no chance that that actually isn't going to happen. Now, the official word from NIH is a competitive but not discussed can still be funded. That remains to be seen if that's a true statement or just something they like to say. We do know that there are program officers asking for reviewer comments and responses to reviewer comments on some of the competitive not discussed, but I wouldn't feel great about having competitive not discussed. Generally, not discussed proposal will not be funded. I have in 25 years, I've had one not discussed proposal not get funded. That was during the pandemic, so that was a weird situation. Yeah, that's already covered. Okay, so here's NIH, 27 institutes. They all have their own piles of money, and they all have massively overlapping missions, which is good for you. Okay, and just in general, one thing you can be guaranteed, anytime the government spends money, it does it inefficient. And you can exploit those inefficiencies. So, so this is last year's success rates. And so on one end for phase ones, on one end of the spectrum, NIEHS, which is environmental health science, had a 28% success rate, pretty good. In the worst case this year, the National Library of Medicine, they have slightly less money than some of you do. So they had money for 0 awards last year, and therefore they granted 0 awards, and 25 people submitted grants there anyway. Now, the important note is that, again, lots of overlap in admissions, and so many projects can go to 1, 2, or 3 of these institutes. And the idea is to figure out, well, how do I go to the one with the best success rate? This data comes out every February-ish. So this came out this February. It covers fiscal year 2025. And the problem is, when it comes out in February, the next grant application is in April, and that's a grant that will come out of the 2027 fiscal year. So the data that's available is actually 2 years different from what you're actually applying for. And what you often see is a lot of the things that have great success rates actually turn out to be not good in 2 years. But something you can do about that. So this is what success data looks like. This is from a few years back. So the top one is NIDCR, which is dental and craniofacial diseases, and the bottom one is NIEHS. On the surface, these look like equivalent success opportunities. They both have a 30% phase 1 success rate. And if anything, NIDCR has a slightly better phase 2 success rate, so maybe that's the better one. However, I see something very different. So what I do is I look at the ratio phase 1 awards to phase 2 proposals. Because what I'm trying to do is say, I'm submitting now in 2 years. So if I do the math out, the grant, the phase 1 that got funded at the end of fiscal year 2025, I'm going to spend 2026 working on their project and then submit their grant. So the phase 1s from last year are going to be the phase 2s that I'm competing against. And one unique thing about NIH is, for reasons that make no sense, they have the phase 1s and the phase 2s compete against each other. And so the top example, they had 17 phase 1s, but only 7 phase 2s in the prior year. So if I look forward to the future year, they're going to probably have 17 phase 2 proposals coming in. And those are all going to be large budget projects. So if I fund 1 extra phase 2, it generally wipes out 6 to 7 phase 1s. So the success rate for NIDCR is going to drop like a rock. Conversely, NIHS, 22 phase 2s, phase 1s, 24 phase 2s, you're going to see similarity to what was already happening in the past. And so they're going to stay stable. And so that's where I want to be. So the idea is to not look at the, the whole one thing, how's it go, like past performance is not equal future success. You have to kind of model out what the future will look like. And there are other factors that can come into play here outside of just the pure numbers. Sometimes things will happen like all of a sudden Congress gets excited about something. So if I go back 6 or 7 years ago, they did a big thing called the healing issue, which was basically a mountain of money, around, combating the opioid crisis. Or even like 5 years ago, they started spending extra money on Alzheimer's. The first year they started the Alzheimer's money, they funded every single SBIR that got a score of any kind, no matter how bad the score was. As long as you got scored, they funded it. Because when you go from a small amount of money, you suddenly turn on a lot of money. You don't have phase 1 in the pipeline. Poof, you have to find a way to absorb the money. And so those are the kind of things that influence success rates. And again, people who could actually, be, one of the things I love is drugs that are actually good for multiple indications, because it gives me flexibility. And the reality of developing a drug, huge amount of the work that you do has nothing to do with the indication you're looking at. So if I have a drug that works for cancer and Alzheimer's, get to the FDA, most of the data that I need is on manufacturing and on safety, which is irrelevant of which disease that I'm going for. So if I want to get the cancer drug, it also works for Alzheimer's, to pay for all my safety data and, pay for that, I pitch it as an Alzheimer's drug. I spend 10% of the grant doing an Alzheimer's research, 90% doing my safety stuff. I triple or quadruple my chance of getting funded. which is just far more effective than trying to, like, last year, NIH's success rate for phase one was 4%. It's not, oh, and I should also mention, NIH also lies about their success rate. They count the numbers in weird ways, so they say, if you submit a grant and then resubmit it in the same year, that's only one grant. So when they say success rate's 4%, it probably was 2.5%. So they're always worse than they sound.
You know, this is kind of interesting because NIHS and NIDC are actually some of the smaller NIH institutes.
Yeah, so generally, yeah, in some cases, small can be good, some cases, small can be bad. So, it really has to do with volume. So, two of my favorite places, so generally, yeah, I just back up. The parts of NIH that people understand well tend to be the worst places to go. So, NCI, National Cancer Institute, everyone knows what they did. Terrible success rate, plus everyone wants to be in the oncology space and the commercial side. Places that are really good generally. NCAS, which is the National Center for Advanced Translational Science. NIGMS, National General Medical Sciences. So mostly NIH is carved up by diseases and body parts, but some parts of NIH have broad things. They have lots of responsibility in lots of places. Makes them easier to get things into project into them. But also more importantly, most people have no idea what those institutes do, so they don't send their grants there. So, good example, we had a company doing a drug delivery technology for cancer. NCI's got brutal success rates. So what did we do? We said, let's send this to NIGMS. Well, NIGMS doesn't fund cancer projects, but they do fund drug delivery projects. So we write the grant a little bit differently. We said, here's this amazing drug delivery technology. It works on all kinds of diseases, but we have to test it on something. We just randomly pick a cancer model. So we did the exact same work we would have done on an NCI grant. We just packaged the story differently to make it a drug delivery grant. And instead of having a 10% chance of getting funded, we had a 30% chance of getting funded. It did get funded and moved forward. So you're trying to find ways to basically put yourself in the best bucket, tell a story that's actually useful. Another great place if you're in like the drug development space is NCATS. So NCATS has this part of their mission is to work on drugs that have mechanism of action that are common to multiple diseases. Same thing happens there. You have a disease you want to work on. When you write the grant, you tell it upside down. So normally what you say is like, I'm going after disease X, it's horrible, it kills lots of people. Here's the target you can go after, here's the drug of the data. With an NCATS grant, you say, here's this really cool molecular pathway in the body. And it's common to all these diseases. And we have a drug that hits it. And then we're going to work on this and we're going to do something. And we have to choose something. So we're going to pick cancer or whatever disease you want to go after. So basically, it's just telling the story that they want to hear. Okay. And then when you get funded, again, so more, AKA more lives from NIH. Okay. So NIH will tell you if you submit in April, you'll get funded December 1st. If you submit in September, you get funded April 1st. You submit in January, you get funded July 1st. The red bars are what really happens. So basically what happens is they sit around till summertime and then make decisions. And the reason why is they don't want to fund good projects and not be able to fund a better project that comes in later on. So it's like, that girl's cute, but I don't want to walk in the door, so I want to keep my options open. So it's not so bad when you submit in January, because already January, you get funding in summer, that's great. You submit in April, following summer is a long, long, long way away. And in that time, you're in this weird limbo of like, it might get funded. Most institutes will allow you to submit, in the meantime, and resubmit it to try to improve your score to make sure you get funded. And generally, you want to do that. There's a few of them, though, that will say, if you submit it, we're going to withdraw your prior submission. And you would think, so the way it's supposed to work is you submit your grant, let's say you get a decent score, say it's on 30. You then do a resubmission, and you basically reply to the reviewers, and you say, I got a 30, and I made all these improvements, and so theoretically, you should have a better score on the end. It doesn't always work that way. I would say that 80% of the time it does, maybe 7% of the time, 20% of the time you get the exact same score you had before, And then 10% of the time, something weird happens and you're like, well, I had a 30, and now I came out with a 45 somehow. And part of that is linked to the weird way that they do scoring. So the way scoring works is there's a giant panel, kind of group like this, but they're gonna pick 3 of you to be the lead reviewers. And those ones have to actually read the proposal. Everyone else doesn't have to read it. Those first 3 will then sort of give it a preliminary score between 1 and 9. And then they average those scores to sort of determine if the top half or bottom half. And then they'll talk about it, and then the whole group will sort of vote on it, what it is. But in general, the whole group is range bound by the highest and lowest score of the 3 lead reviewers. And so if in your first pass, 2, 3, 4 are your scores, they have to go up between 2 and 4. Now all of a sudden, she decides not to review anymore because it sucks. And so the guy behind him is the next reviewer, and he's like, I think this is a 5. Now all of a sudden the group's open to 2 to 5, and that changes your dynamic a lot.
Also, aren't you competing against a different pool of grants when you resubmit it?
Correct. That's good. Yes.
Do you expect with the whole SBIR reauthorization that these numbers will look different for this year since we've had such a wonky start to the year?
No, because again, they will, because there's no new awards between October and May, so wipe all those out. They're gonna all be July, August, September. The hockey stick's gonna be even more pronounced this year. The reality is the grants from this year are the ones who submitted April and September. If you submitted a grant last April, September, you kind of bundled into some really great luck, because normally you're competing against 3 full deadlines of proposals. The January submission cycle would have also been in there, but they got wiped out. So you just locked into a year where only 2/3 of the applicants are going. Now, in 2020, fiscal year 2027, which is like the one you're going for now, there'll also only be 2 deadlines because the April got wiped out. But everyone knows that, so they're jamming in extra grants. And so the advantage, like, it's only a benefit because no one knew it was gonna happen. This time, everyone knows it's gonna happen. The other problem is when you jam more proposals into the same number of deadlines, the sort of noise, signal to noise ratio changes dramatically during review. So how many of you have been a reviewer for an agency? Okay, for hands up. The way it works for those of you who haven't been, the government says, please review some proposals, and you say, sure, I'll only review 5. They'll send you 9. Each proposal is somewhere between 90 and 150 pages, depending upon what you're doing. So you start stacking up 5, 6, 7, 8, 9. This is your stack of paper to read. So they'll say, read all those, and then come to a 1 or 2 day, full day meeting where we'll talk about these. But don't worry, we're gonna compensate you. We're gonna give you $322. If you do the math out, like if you actually read all these things properly, it's 100 hours plus of work for $322. So obviously, if you have any intelligence, you're gonna be like, all right, well, I'm not really gonna read all of these. So you quickly try to figure out what's important. But then it becomes more noisy because, like, you're going through these and you're on number 14, it's 11 o'clock at night, you're tired, you're out of here. And so you just have more risk of just being knocked away for human reasons. And the same thing happens during the actual discussion. Like at a certain point, second day of the meeting, it's Friday afternoon, like you got things to do, everyone's like, sucks, and moving on. So, what you can be sure is like there'll just be more noise. Now, noise isn't always bad. Sometimes noise is good. Sometimes you're lucky. And it breaks your way. Sometimes it doesn't break your way. Okay, Department of Energy. This is the agency that's been a total disaster since last January. Basically, they just randomly shut down. They haven't announced anything. They are 1, 2, 3, 4 cycles behind. Everything just says delayed on their website. There's some rumor they're going to totally change their proposal structure, but nobody knows for sure what's going to happen. So mostly this is what it used to be, may still be, but I might be making things up. Okay, so normally in the past, They do 2 phase 1 solicitations a year, in July and November. Broken down by Office of Science and then more applied programs. They have very explicit dates. So they come out, you have a letter of intent due, you know in advance the exact date. The letter of intent is really important, otherwise you can't submit. One nice thing about the DOE is you're allowed to train what's called sequential phase 2s. So you win your phase 1, you win a phase 2, you can win a second phase 2, and you win a third phase 2 on the same phase 1, which is great because that's like instead of winning, you know, 1 point something $1 million, you're now winning 3 point something $1 million. The problem is the word sequential. So start doing the math out. We spent a year in phase 1. You spend 2 years on your first phase 2, 2 years on your next phase 2, 2 years on your next phase 2, and then the gas in between dash proposals. You're looking at an 8 to 9 year cycle, which isn't really startup speed, if you ask me. But great if you can get it. It's very beneficial to have a national lab as a sub-awardee if you're doing a DOE project. Why? Because the largest cohort of reviewers are scientists who work at the national labs. So if you, our data is incredibly clear, if you involve a national lab, you will have a higher chance of getting funded no matter what. Here's the national labs. National labs are really difficult to work with. So if you work with a university and you know how like the bureaucracy is, multiply that by 10. And if you work with the university and you said, oh my God, the overhead rates are high, multiply that by 2 for national lab. But if it gets you funding, it's a kind of a pay to play world we live in. Okay, DoD. So DoD mostly, like I said earlier, very specific topics. There are some exceptions. They generally, they always talk about dual use technology. It's half serious sometimes. I mean, they like dual use because oftentimes their markets are too small to actually sustain themselves. But if you really, you know, pin them down, like they'd be like, yeah, we really just care if you can get us in our supply chain. I'd also say that my belief is if Congress went to DoD and said, if you want to, you can just give all the money to Lockheed Martin, they would say, great, let's do it. I think they kind of view it more as something they have to do. And that, you know, there's a lot of problems with DoD SBIR. The biggest problem is people who win excessive awards. So there are multiple companies that have won over 1,000 DoD SBIR, which should be totally legal, but it's not. They're also generally structured as contracts. I'll talk a little about that later on. It can cause cash flow problems. And then, of course, each agency, you know, does their own topics. There's no communication among agencies, so they kind of do their own things. They often ask for the same exact thing somebody else asks for.
So, in this case over here, so we're talking SBIR, this case, that's a grant. So,
Okay, so SBIRs can be issued as a grant or a contract, depending on the agency. So, places like NSF, NIH, DOE will issue grants. The DoD, NASA, Homeland Security will issue contracts. So agencies can choose between grants and contracts. I'll get into the differences later on in a bit, but for the most part, they're kind of the same, just different mechanism of giving the money.
With correct me if I'm wrong, with the contract here, that will deliver, correct?
Correct. But not really. So what often your deliverable is your report describing what you did. So, you know, even if like whatever you're doing just blows up in your face, you just report like, hey, it didn't work. So you satisfy your deliverable. So not that big of a deal.
So, not to muddy the water. So with the grant though, SBIR, phase 1, USDA, in this case over here, so they're providing a set amount of money. That's given non-dilutive, so you're not coughing up any ownership of the company. And that money is sequestered to you. You perform whatever you were doing within the scope. Now with the contract, yes, contract with big commercial. In this case, you have a list of requirements, deliverables. In this case over here, so you have a responsibility. In this case, so we have legal responsibility at the end of the contract if you don't have your deliverables done. there's usually a penalties.
I've never seen one be penalized, first of all. Secondly, again, your deliverable is your report of what you did. So while yes, you have a deliverable, like if you can't write a report up about what happened, that's maybe you deserve some penalties. But it's not that much different from a mechanism. Like even with a grant, you're required to do the work you're proposed to do. You can't just go off and do it. It's not like, you know, a pile of money, do whatever you want. You still have an obligation to actually deliver under the aims. Otherwise, the government will pull all the money back. So they're not that different. What really makes the difference is some of the contracting law around the accounting, and some of the law around like IP data rights a little bit different.
Okay, that's the part. So, for example, if you go on grants.com, so what makes an SBIR particularly special is versus. So going to USDA, in this case over here, you saw was open. I pulled down 42 opportunities. Those opportunities of 42, 0 of them are SBIR, because none of them are actually an SBIR phase 1 grant, a very specific package. There's still other opportunities, but they are not specifically SBIR phase 1. So all the other opportunities are different mechanisms, some of them contracts, some of them other things, but they are specific.
Yeah, so
not
I'm talking about DoD SBIRs. DoD does their SBIRs as contracts. USDA does their SBIRs as grants.
But is the contract more sustainable or is it the same thing? It's
What do you mean by sustainable?
meaning if you can get one contract and you can have like a, you know, package for other contracts and stuff.
Yeah.
Instead of SBIR, you know.
Okay, so the agencies that give out contracts are also the agencies that go back to the same companies over and over again. So in that way, yes. Also, you'll hear what's called a phase 3 SBIR, which sort of exists, but also doesn't exist. So but it's almost always only done on contract. So basically where phase 3 is if you win a phase 1 and you win a phase 2, let's say I'm making, I don't know, water bottles under my SBIR, which would never get funded if you're wondering. But if it did, and the DoD was like, these are the best water bottles ever. If you want to buy a million of them, they can actually just give me a contract without putting it out to bid, which is the beauty of phase 3. Because they can use the phase 2 bid process to count for your actual bid. So the DoD likes that, that cuts their paperwork, it's super easy. There's also some weird gaming of that happens. So like sometimes bigger companies will buy little companies to grab their phase 2 win, so they can actually use it to get some money funneled to them. It's kind of a dirty world, but yeah, I mean, but it's super hard to get to a phase 3, but that possibility. Also, some of the rules around like equipment and stuff are very different. So like if you buy equipment under a grant, you own it. If you buy under contract, government owns it. So at the end of the contract, you either have to buy it from the government at the appreciated value, or ship it back, or get arrested.
Yeah, I think the difference may be who will hold the money. Like in the academic, a PI hold the money, they call grant. Yeah, if the money are sent to another institute by a subcontract, that's a contract. So that's the.
No, because you know, at the end of the day, like whether it's a grant or a contract, the PI is running that project. It's just a different set of federal rules that govern the mechanism they're giving it to you under. For your purposes, largely the same. Where it really comes into is how you're reimbursed, some of the rules around the accounting, and I'll get to that later on. Someone else had a question.
Is OP a contract or is that different?
Okay, OTA become very popular recent years. It's called an other transactional authority, which is not a contract, not a grant, just a weird way for the government to do things with minimal rules. And they've kind of done that because a lot of these are really small. So if you're giving out $100,000 contract for an organization like the federal government that does $7 billion in subjects, it's kind of insane because it's a lot of work just to issue a contract. So OTAs are meant to sort of streamline that process. Again, lots of abuse that goes on how those are used, but some agencies have started to use them for SBIR. Okay. The problem with the DoD is that lots of times the money is already going somewhere because the DoD's world is very sequential. So, okay, go back to my water bottle example, which is a stupid example. I'll do it anyway. Okay, so imagine they fund me to do the water bottle. And now they're like, wow, you know what we need? We need a thermos. And this guy here did an amazing job on our water bottles. And we know exactly how he did it. We loved it. So we're going to write our topic. So it's almost exactly described his water bottle, except now it's got a soup spoon attached to the side. Guess who's most well suited to actually win that? I am. And so what happens is you see sort of the same companies winning over and over again because of the sequential nature. And also a certain amount of simplicity, known quantity. You know, if you, some of these companies, so you probably don't know this today, but like the size limit for an SBIR is 500 employees. In my opinion, that's not a small company, but in the government world, it is a small company. If I give money to a 300-person company that's well established and the project blows up, it just didn't work. If I give money to a 1-person company and it doesn't work, someone's gonna go, how did you fund that guy? He's never done anything before. And so from a program officer, the risk perspective is actually much more on your side. So one of the things you want to do is look at the awards from the prior years with DoD in that sort of narrow space that you're in. If you keep seeing the same couple of companies popping up each year, that's what's going to happen this year. Same couple of companies. And so you want to avoid those opportunities. Generally, the DoD will usually have multiple phase 1 awardees. And then you compete off of the phase 2. If they're funding that same company into phase 2, and you win your phase 1 and you're all excited, like, guess what? You're just there to be candidate fodder for phase 2. So you really want to screen these opportunities carefully to make sure it's actually an opportunity you can actually go after. Okay.
I have a question about that though, because in the new SBIR thing, one of the things that I really want to get rid of is these SBIR.
All BS. Okay, so. Okay, so the short version of what's better. Would you have these 15? Oh, all right. I'm way behind that. Okay. Okay, so basically, okay. So what happened is the law passed. The way it passed, it said agencies have to put a limit, which they're already allowed to do, but they decided not to, except for NSA. And they're allowed to set the limit at either company level, solicitation level, or topic level. So the most likely outcome, the DoD is going to say, you can submit 1 proposal per topic. Well, what company is actually submitting more than 1 proposal per topic anyway? So it's probably going to be 0 impact. Okay, so there is some exceptions. The biggest exception is AFWorks, which is the Air Force thing. They're kind of wide open, send whatever you want. Historically, phase 1 is really easy to get. Phase 2 is a little bit harder. The idea was to give you a tiny phase 1. You use the phase 1 to go find an internal customer in the Air Force. The big mistake people made was getting a phase 1 before they're ready to get a phase 1 because they couldn't. In order to actually get a phase 2, you had to get a sort of an MOU, a memorandum of understanding from an Air Force customer who would really work with you during the phase 2. It's not easy to get. So what would happen is you would get your phase 1, you'd be, I'm so excited. You'd run around to all the Air Force bases, find customers, and you get someone who might be intrigued and you say, here's what I'm doing. You would say, great, show me your prototype. And you'd be like, I don't got a prototype yet. Guess what? You're not getting an MOU. So fast forward a year and a half later, you got a prototype, you throw in a new phase 1, but Air Force is like, yeah, we already gave you a phase 1. Like, you didn't know you couldn't get any traction. Why would they give you another phase 1? And so you have to be ready to take advantage of the opportunity to be close to the point where you can sort of get somebody excited. Otherwise, you're just wasting your time. Okay, get the ball hard every time. All right, so first thing, most people are terrible about scoping out their phase 1 projects. People try to make maximal company progress. Like, oh, I'm gonna make an MVP. That's not what's happening here. What's happening here is the government saying, here's a small pile of money, use it to prove we actually give you a big pile. Sometimes that means making a throwaway prototype. To try to prove principles to de-risk technology, and that to do that, you have to understand your inflection points. So basically, it almost never happens that your value kind of increases linear. What happens more is a staircase. So I build a component, haven't climbed the stair. I test the component, get some data which shows it actually works, I climb the stair. you have to know where your stair points are and climb as many stairs as possible on each project. Otherwise, you're not going to move forward. Even if you do win phase one, you'll never win a phase two because you haven't actually moved the needle because you're just horizontally crossing the floor. So project scoping. Okay, so phase ones, you might have talked about fast tracks and direct phase twos. Okay, not all agencies have them. But picking the right one's really important. So phase one, simplest one, lowest amount of preliminary data. Next option is a fast track. So you bring your phase one and phase two in at the same time. Reviewers know that it gets gated by the program officer. So they want you to have in advance strong quantitative go, no-go criteria to sort of set what you're going to do. That being said, program officer, you're still going to spend it on the thing that you want. Most importantly, though, if you need your phase one data to properly design your phase two experiment, you are a terrible candidate for a fast track because your phase two approach is going to be really wishy-washy. Like, and if it says this, I'm going to do that, I'm going to do that, I'm going to do that, you're going to get killed. Don't do a fast track. Last thing is direct to phase twos. What you're saying is you've already done the equivalent of a phase one on your own. Everyone comes to me and says, I've done the equivalent of phase one. No, you haven't. So first thing to understand is what does the phase one look like at that agency? So like, as of last year, NCI phase one was $400,000. If you have not done $400,000 worth of work, you have not done the equivalent of phase one. More importantly, you have to ask, where are people who win a phase two at that agency? It also turns out that people who usually win a phase one at NCI have already done $500,000 or $1 million in work. So you actually have to be like $1.5 million into it to actually be competitive. So you want to look at the phase two awards and say, am I in the same spot as they are when they started theirs? If not, you're probably not a good candidate for a direct phase two. Generally, I'm bullish on them if you're a good candidate, just because the time frame, the way the process works, like you just cut out so much time by going to larger money right away. If you win a phase one, well, submit a proposal, wait, win your phase one, work on your phase one, submit your phase two. That's 2 years of time for very minimal progress. And then terminal phase ones. Over the years, tons of companies come to me and they're like, I won 3 phase ones and 0 phase twos. What's going on? And they're creating what I call terminal phase ones that were never designed to sort of change the narrative significantly, and therefore they had no chance of winning the phase two. Literally, they lost the phase two the day they submitted their phase one, and just didn't know it. So make sure you're changing the narrative. Points of entry. Okay, so I talk about points of entry. When you go to the airport, go to the newsstand, pick up a magazine. What do? Look at the cover, look at the pages, look at the figures, read some of the headlines. If it's interesting, you buy it and bring it on the plane. If it's not, you don't. That's kind of the sorting process with reviewers. I flip through and then I sort the proposals based on level of interest. In the top, you get a full read. From the bottom, you get a quarter read. In the middle, you get a half read. If you don't control points of entry, you're in your review back, and they're going to say comments that make no sense. You're going to say, you didn't read my proposal, and you're right, but it's your own damn fault. Okay. Like I said earlier, SBIR panels are far broader than typical academic panels, which means your experts aren't experts. And what will tend to happen is, thing people struggle with is your own expertise works against you when you're writing a grant. Because you write your grant, and you read it back to yourself, and you say, this is amazing. But what you can't separate what's on the paper from what's in your head. And so your 30 years of experience in your field is holding it all together. Now, when you go to a review panel, it's not really experts in your field. That all falls apart pretty quickly. You have to make sure that you're actually communicating things. So in SBIR, you have to be far more educational than you would on a standard academic plan. Okay. So I have a lot of problems the way that people are taught to write in America, and these are 2 primary ones. One is what I call writing to space. And so whether you realize it or not, the K-12 system will teach you to fill pages with meaningless words. And so by the time you get to high school, you figure it out. And so if they say write a 10-page paper and you write 2 pages of content, 8 pages of fluff, and I write 7 pages of white type content, I'm going to get a D- and you're going to get a B+. Why? Because you filled 10 pages. Now, what happens is you've actually adopted an information sparse writing. That's a real killer here, because you're in a one-way conversation with the reviewer. And any information you don't include could be the piece of information that kills you. So you have to write really, really tight and get a lot more content in. Even though the application itself are pretty large, in some cases the science portion is pretty tiny. So NIH phase 1, 90-page PDF, packed in the middle of 7 pages of science. If you're writing in an information sparse writing style, the odds of you leaving out important details is very high. Secondly, in middle school, they teach you to write these 5-paragraph essays where you have these great introductions and talk in the middle and get this great conclusion. If you do that here, no one's ever read the conclusion. You have to write more like a newspaper, you punch first. And so every grant, everything important has to be on the first page to the point where if you only had 1 page, what would you say? That's the first page. Every section, everything important in the first paragraph to the point. If you only had 1 paragraph, what would you say? In every paragraph, everything important in your first sentence. You're basically fighting a constant battle to make sure they read the rest and have to punch first. Generally, these are a lot like peer-reviewed journals, but not typical academic exploring. The best way I can describe this is, if you're wearing your university hat, you can say process A produces effect B, that's science, you can get grants for it, you can write papers about it. But in my world, you have to go 1 step further. Process A produces effect B at threshold C, which makes it commercially viable and interesting and relevant. And you have to build everything around that C. So you don't just say, I'm going to see if compound X has an anti-tumor effect. You're going to say compound X has an anti-tumor effect of at least X%. Otherwise, you're not actually driving it towards commercial traction. Everything else is pretty straightforward. Don't make mistakes, write concisely, cite your peers, numbers. Turns out that even really, really smart people are bad with numbers, especially numbers that are smaller than 1. So this is nothing to do with SBIRs, but it just illustrates the point. So I think a bunch of psychiatrists who are relatively educated people, and they said, all right, if you release this patient, 20 of 100 similar patients will commit a violent crime. What do you want to do? And 41% said, I'm not going to release them. Then they said, okay, if you release this patient, 20% of similar patients will commit a violent crime. What do you want to do? And in that case, only 21% would actually refuse to submit them. Now, 20 out of 100 and 20% are the exact same number. People don't understand small numbers, and so you have to often portray them in different ways. Because some people understand fractions, some people understand percentages, some people understand decimals. If you just put your number one way and it's small, it'll often get misinterpreted. Charts. Everyone makes charts, but nobody controls the narrative. So this is actually a real example from a project where someone came to me with an unfunded proposal. What this is on the left-hand side, it's a treatment to basically for a nerve injury. And they submitted the grant, the reviewers said, your treatment's no better than the control. Problem is, that was never the point. The point was, we can get you back to healthy faster. And so, but the reviewers focus on the wrong axis because we let them just interpret whatever they wanted to interpret. So by annotating on top of the graph, we control the narrative of what they're reading, because data can be interpreted in many ways. These are very different than what you put into your, like most people will do is they'll say, oh, here's my journal article. Let me just take your data from there and plop it in there. But oftentimes, some of those work, but sometimes you need to actually control the narrative and say, this is the story I'm really trying to tell. Commercialization. All the agencies will say they care about commercialization. Another lie. NSF cares a lot. So if you're doing NSF phase 2, what I tell you is, well, NSF will tell you your project's weighed half on the research and half on the commercialization. I will tell you it's weighed 80% on the commercialization, 20% on the research. If I go to NIH, it's the exact opposite. And why? It's based on how the reviewers are chosen. So if I do an NIH proposal and I give your commercialization plan to a bunch of academic professors, they have no idea what commercialization looks like. So what do? They focus on the research plan. So when you're doing an NIH phase 2, I tell you, you play to win with the research plan, and you try not to lose the commercialization plan. And so because the reviewers don't actually know what the right answer is, but they know a lot of the wrong answers. So it's more about not being wrong than being right. Whereas exact opposite NIH. And so that's important to know because that dictates how you spend your time. If you spend 80% of your time on your NIH commercialization plan, the odds of you getting funded is pretty tiny because you spend all your time in the wrong place. All right, so obviously the current administration has a different view of the world than a lot of us. And that changes how you write grants. But it's not really any different than the way it's always been. It's just more, maybe more extreme. So, last February, one of my clients who does wind power called me freaking out. I'm like, listen, last year you were ridding the world of carbon. This year you are providing an endless supply of energy for American industry. You're just telling a different story. So basically, this has always been truth. I mean, every argument was, in favor of carbon was hyped more than it should have been under the prior administration, and now it's underhyped. So it's just the lack of awareness going into it. So you're just trying to sort of pitch to whoever's in power something they want to force. But also remember the reviewers, the same people they were 3 years ago. The program managers are mostly the same people they were a couple of years ago, though many got fired. The administration will be gone in a few years, and the circle will move around again. Letter of support. If you're doing NSF phase 1, this is something that disappeared for a couple of years, and then suddenly popped back in, and people weren't expecting it. I'm actually glad it's back personally. So you're allowed to have a letter of support. You have to have at least one with your phase 1 proposal. Interesting thing. So something I've actually tracked for the last 25 years. People who work with me who struggle to get a good letter of support in phase 1 will almost never be successful in the end. If you can't go get a flimsy letter of support, you will not be able to raise money. You will not be able to get a customer. You will not be able to make a strategic partnership. So if you're struggling to get a letter of support from what you're doing, you might want to step back and take a longer view of what you're working on and see if it's a good idea. NSF three categories: customers, partners, investors. For those letters, investors are a letter of last resort. Why? Because if you've invested in the company, I already mentioned that many times with the proposal. So you're not anything any new. And if you haven't invested in the company, it raises the question of the reviewer. If this investor is so excited, why is he writing a letter on chair? So customers and partners are what you're going to focus on. Yeah.
The letter of support, was it competitor? Or the letter of support, like this competitor, one of the, I saw you.
Yeah, thank you. Thank you. So what I'm saying here is partners. So a partner is somebody that usually could be a partner, could be a competitor, more importantly, could be an acquirer. So let's say I'm developing a cancer drug, Pfizer is possibly a competitor, but also the person kind of biased. For many people, whatever you're doing, even if you're wildly successful on your own, if you can sell 100 of them, a big company can sell 10,000 of them. And so your innovation is often magnified by being acquired, and showing a pathway to acquisition makes a lot of sense. Okay. Letters. Most important thing about a letter is the letterhead. Bigger the company, the better. If companies recognize it, if viewers recognize it, it helps. Always write the letter first. When you ask for a letter, you go to, I don't know, Microsoft and say, I want a letter of support. They're going to say, we don't do that, because they interpreted you want a letter of commitment or a letter of intent. So you write the letter first. What's a good letter look like? Paragraph 1, all about them. We're Microsoft. We sell $1 gazillion a year in software every year, blah, 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 blah. Paragraph 2, whatever you're working on, this is a really important problem. Paragraph 3, we would love to see what you're working on. When you hand a letter to somebody, they go, this doesn't really say anything. Exactly. They can get it signed. Otherwise, the lawyer's going to kill your letter. I half jokingly say, I don't actually care who signs it. The janitor can sign it, just as long as he puts it on letter. If you want 3 letters, try to get 5 or 6. And they're a big part of the phase 1 decisions. Okay. Phase 2. If you don't win a phase 2, none of this matters. You win a phase 1, you can call your mom, she's really proud of you, but it doesn't matter. Win a phase 2, it changes the value of the company. Everything you do as soon as you win your phase 1 is about winning a phase 2. So, and that often means that what you said you were going to do doesn't make as much sense as it once did. So if that happens, immediately talk to the program officer and try to renegotiate altered structure and scope. Okay, and a lot of agencies give you a trade-off of when you can submit your phase two, so like NSF, you have 24 months after your phase one start date. NIH is 24 months after your phase one end date. Our data is pretty clear, the longer you wait, the higher your success rate. Now, it's not because you're waiting, it's because if you're actually trying, your story gets better and better over time. Now, clearly you don't want to wait that time. What you're trying to do is find the point where you've gotten as many of the easy gains as you can get and then go there, because money that comes sooner is worth way more to you than money that comes later on. So you can imagine that like you're working on NSF phase two. What I would do is I'd say, okay, we got a story here. My next question would be like, what happens in the 6 months after we submit this? And they're like, oh, well, I got this partnership coming online with it. I'm like, oh, that's interesting. And if I told you you have a 45% chance of winning your phase two today, but it'll be 80% if you wait 4 months, what do you want to do? My guess is you're going to wait. If I tell you it's 50 versus 53, you're going to say, we're going down. So you're trying to understand how much probability you can gain in the time trade-off and maximize that relationship. Okay, for disclosure. So I don't have. Yeah, about 15. Okay, all right. So Congress a few years ago implemented some really not well thought out rules about foreign disclosure. And these involve interactions with countries of concern, aka China, Russia, Iran, and North Korea, though North Korea never come up in any conversation. If each agency has their own ability to sort of implement this as they see fit, NIH has done some really stupid things. And so basically last year, about 25% of the projects that should have been funded were not funded for foreign disclosure projects. These can be very tiny things. So like, I have a consultant from a university, and oh, guess what? He published a paper with someone who's a professor in China. You now have a affiliation with a foreign government in their eyes. And so now you cannot be funded. The two big things are usually links to people who are publishing with Chinese scientists, which is not that uncommon in the university world. And then use of Chinese-owned CROs. Some of them are obvious, like Wuxi. If you use Wuxi, guess what? You're banned. But there's also some companies that don't actually appear to be Chinese-owned until you look 3 layers deep. So like there's a company in Pennsylvania called Frontage, which is actually owned and listed on the stock exchange in Singapore. But under the hood, it's 51% owned by Tiger Chem in China. So again, if you didn't know that, you put it in a grant with them doing work on it, you're killing. NIH is the only agency that's not allowing mitigation. So what happens is they review your stuff and say, oh, you got a problem, you're not funded, you're looking to submit in the future. Up until the new law, they were also not telling you what the problem was. So you had to kind of whack-a-mole as to each submission. The new law requires them to tell you what's wrong, though there is some rumors they're going to give you a kind of crappy form letter which checks a box which says in a broad category. So they might say, oh, you had a problem with a foreign affiliation with one of your personnel, but not tell you which person. So it's kind of a mess. The one thing that is new is that program officers are now willing to talk to you a little bit more about it because they've loosened their rules what they can say. So I'll say this though, like you have to be very careful with people who have any kind of affiliation. Mostly it's China. Obviously a little bit of Russia and Iran. And if you find someone who's from North Korea who's a scientist, please, I'd like to meet that person. Okay. Last year, super chaotic. I usually post on LinkedIn about it, so if you want to follow me, I'll tell you what's going on. Okay, so you win an award, everything goes well, now what? I like to say your problems are just beginning. So you have, first thing you have is government data rights. Anytime the government funds your research, whatever intellectual property is created under their dollar, they have the right to use for free forever. Sounds terrible. If you're at a university, you're already under those same conditions anyway. Secondly, I would say the government's precedent for using these rights is almost negligible. There's a couple of cases. And if they were to ever use those rights, my guess is your company is a complete dumpster fire anyway, and you have much bigger problem there. Thirdly, it's not that hard to create a mitigation strategy. So let's pretend I'm inventing the first automobile. And I want the government to fund all the work into it. One thing I'm gonna do is make sure no government dollar touches some critical part. Let's say the wheel. I'll let them pay for engines and transmissions and seatbelts and windshield and everything else, but I'm paying for the wheel all on my own. So even if they want to use their rights, they still have to go through me to get the value for the wheel. Government accounting rules, you just saw a presentation on that, so I'm gonna quick about that. Where people get in trouble is always the late. Because you might have recalled them talking about timesheets. If you're one of the tiny portion of people the government is deep into and they audit you on this, if you don't have timesheets, it goes in one of two ways, the good way and the bad way. The good way is they say, where's your timesheets? And you say, we don't have them, they're a real pain, we're a startup, we don't like them. They say, don't worry about it. You want our money back. That's the good. The bad version is exactly the same, that they want to put you in jail. So keep timesheets. Reporting requirements. It's the government, there'll be paperwork. All kinds of reports. Depending on the agency, you have financial reports, you have manpower reports, you have financial conflict of interest reports, you have research integrity reports, you have reports like you can't even imagine. They're just part of the process. Sometimes reports will actually link to cash flow. So going back to the contract issue, in the contract, they have to buy something. So they're buying those reports. And so they're always paying you after they get the report. So the way this works is, you get a DoD contract, you're super excited. They say, great, you're gonna get paid monthly chunks. After you put your first report in, we're going to give you a report. So you work for the first month. 15 days later, you put your first report in. 15 days after that, the program officer says, great, this is good. 30 days after that, money comes from the DoD. So $1 left your company day one, $1 comes in 90 days later. Now, turns out not terribly hard to get a line of credit based on a government contract, but it will cost you. This whole thing is super slow. Do the math out. It's a 4-year process to go to phase 1, phase 2. I've been doing this 25 years. Number of companies that have successful exits solely based on government funding, 0. If you want to try, I would bet my house against it. My wife's probably shocked to hear that, but when I tell her about our new vacation home, it'll be fine. You have no chance of leaving that way. You just do the math out. Okay, so today you're like all excited about this. You find an opportunity. Let's say you're going for NIH in September. You spend the next 3 months working on a proposal. And I'm being very generous for the 6 months because there's no way I just give you a grant that fast. You spend 6 months waiting for your award. You win your phase 1. You actually get it done on time, which almost no one does in the first 6 months. You submit your phase 2 in 3 months, wait 6 months, do your 2-year phase 2. That's a 4-year process. And that's if everything goes perfectly, no resubmissions, no delays in research. As that time gets bigger and bigger and bigger, it gets harder and harder and harder to make this happen. So it's really important that you understand this is not a sole strategy. And this kind of goes into using the programs that are properly. Those with warrants, that's you guys. My wife says I shouldn't talk about that, but I do it anyway. All right, so there's no scenario where you win an SBIR and you go on and become rich and famous based on your SBIR. It's not going to happen. But what can happen is SBIR removes risk. Risk allows you to get investors, to get employees, to get partners, to get customers. It's a stepping stone. But you need other things before that. SBIR money is way too slow, way too restricted to bring anything that's actually, sort of worth SBIR funding. So, like, okay, you're doing a cancer drug. Well, a cancer drug costs $50+ million to bring to market. And you can win a couple million from NCI. It's a drop in the bucket. But what it can do is bring you far enough along that you can actually get an investor excited at decent terms. Okay, so as soon as anyone wins a phase 1 with me, the first thing I say is, go raise some money. And half of them say, why? I want a grant. Well, let me tell you. Yeah, so I believe in raising money from strength. You win your phase 1 award. Well, pre-phase 1, you got your cool team and you get your IP. That's your company. What's it worth? Not much. when you're phase one, now you got your cool team, your IP. You also have third-party credibility, because now you can say, hey, NCI, NIH, NSF funded me, and you have money. Great position to raise money from. More importantly, model out the downsides there. You might win your phase two, you also might not win your phase two. If you don't win your phase two, what's your story? Well, you got your team, you got your IP, but now you have negative credibility. You have to explain to an investor why NSF or the DoD didn't fund your phase two. What's wrong with the technology? Why isn't it working? And you got no money. I guarantee the terms that you raise money on, the brand new, just issued phase one, are much better than a phase one that didn't go to phase two. Same thing holds when you go to phase two. To use those sort of momentum points to actually raise your next round and push you along. Further, you have a gap between phase one and phase two, no way to fill it. And reviewers know that the government money is not enough, so you showing you're willing and able to raise money dramatically changes their view of how you are. And what happens if some of your experiments don't work in phase one and you have none of your own money? I'm in the same boat. I raised money. Oh, great. Positive. We do that experiment. I fixed it. My data comes back good because I have money. I have flexibility to do this, solve that problem. You do not. So if you want to phase one, raise money. All right. Questions?
We go some more into the DoD contract. Still squishy on that one.
Okay.
Yeah.
It doesn't matter. Here's all that matters. Like, so it's just a different mechanism. It changes how the CPA accounts for your stuff. You shouldn't be doing your own accounting, otherwise you get in trouble. So it doesn't matter to you. It slows down your cash flow. No big deal. Get a line of credit. Some minor tweaks about how you get equipment. It's just a different mechanism. Just a different process. Just means they're paying you for reports. Doesn't like that.
You mentioned NSF requires letters of support. Do other agencies require letters of support?
Not required, but they're allowed in many cases, and they're very helpful. So like if I'm doing a DoD project, I'm going to try to get a letter from like a defense prime, because whatever you're making, the DoD doesn't buy. Like they buy aircraft carriers and F-33s and stuff. So you're making some tiny component, and what the DoD knows is if you can't get what they're doing into their supply chain, it's irrelevant. So let's say I'm making a new sensor. That's how you want an airplane. Well, I'm gonna go get a letter from Boeing and Lockheed Martin to show that I can make those contacts. People who don't, doesn't matter how good tech is because you can't get the supply chain. With NIH, I'm thinking about the reviewers again. They're all academics. So what am I gonna do? I'm gonna go find who are those key opinion leaders who are really well thought about. And like, so I'm doing Alzheimer's drug. I'm gonna go find the expert at Johns Hopkins and I'll find Alzheimer's and say, hey, write us a letter of support. And then the reviewer's gonna go, oh, I know that guy. He does great work. This must be a good project. That's it.
And then the other thing you said about government data rights. So suppose your company is developing software, but it's software you want to commercialize. But does the government own your software after you develop that software?
The government never owns your software. It has the right to use your software for government use for free forever. Again, I'm using my example. It's like, okay, I'm going to make sure certain parts of the source code, no government dollar ever touch it. So even if they want to use their rights, they don't have any value.
Yeah, so I think the trade rate submission, trying to target SBIR or DoD, and they've asked me to actually get data from the government, as customers to actually show that the solution is needed.
Yep.
At that point, who do you contact? Because nobody wants to do your, your survey and all that to give you that data.
Yeah, I mean, what's the technology?
There's a software technology for QASB, quality assurance surveillance plan, so we can smoothen all that, all the administration, vetting and all that. That all can be done.
I mean, so it's tough because like that's a tough space. My guess is your actual customers, not the DoD, but they're vendors, right?
So the actual customers would be the CORs, where they have to do all the CPAS and all that.
Yeah.
So towards the end, they don't have the data, so they just do narrative work. It's just like, oh yeah, and they challenge all the time. So every 5 minutes, there's rebuttals and they fight and all that. But I can smooth.
Yeah, I don't have a great answer for that because that's a really tough audience. Like, to get a contract officer to spend time with you is not easy. They normally what you're gonna do with the DoD is you're gonna find out, okay, what's the trade show or the conference that the key users go to.
Right.
I don't think they have one in this space. So like if I'm doing, a medical project, there's a big conference in Orlando every year that all the medical military will go to. Or if there's the, US Army infantry, there's various conferences that the key decision makers go to. I'm gonna go to that and try to find, support that way. It's not easy to navigate the DoD because they don't have, nice ways of, oh, just call this person here. It's a very opaque world. So you can probably start with conferences if you can.
Okay.
You mentioned the submission with the different institute. Let's say, for example, of the compound, then you still testing on oncology drug, and then submit it to NCI, also start testing on the Alzheimer's disease, and also submit it to companies. Can you do that and accept both?
Yes and no. So if the work you're proposing is the same, you couldn't submit them in the same cycle. You could have different cycles, and you could never accept both. But what I could do is like, let's say I could split it and say, okay, my Alzheimer's drug, I'm going to do an animal model of Alzheimer's, and then I'm going to do the manufacturing and maybe the rat toxicity. In the cancer drug, I'm going to do a cancer efficacy model, and I'm going to do the dog toxicity. The work's not overlapping, so I could get those projects separately funded at the same time, in the same cycle.
Thank you.
Yeah, I have a question regarding NIH. You emphasize the risk for the NSF grant. That they apply to NIH because they are talking about rigor, transparency, these type of things. How to pump to the risk part.
Yeah, so NIH preliminary data is king. So the more data you have, the better chance you have. So like if you're doing, going back to the cancer example, if you're doing a cancer drug and you don't have animal data, you have about as close to 0% chance as possible without being zero. Now I can get away with that in a few other places, but I definitely can't with cancer. Generally at NIH, like in the sort of drug space, it's how much preliminary data do you have and how strong it is it, and then how novel is your sort of approach, target, etc. That's how you win. Reviewers want a lot more evidence than NIH. NSF is more willing to take bigger leaps.
Thank you.
For NSF, for those 3 letters of support, could that be 2 companies and 1 patient advocacy organization if that's possible?
Absolutely, though. I would probably instead get a letter from a clinician. So like, I would get something from the doctor to sort of speaking on behalf. So I'd find like who's the big key opinion leader in that space. Let's say it's diabetes. I'll find who that guy is. Have him write it. Think, oh, technology is existing. Don't actually solve the problem. Patients need this. Advocacy groups aren't necessarily like directly customers, where physicians actually are the ones who actually make the decisions.
Should those letters be submitted with the project each? Or
No, you're not allowed to submit with the pitch. They come after the proposal, so you have time to get it in. One other random, I just thought of it. When you submit your pitch, you kind of lay out what you're going to do. You have a fair amount of flexibility to move your project between like pitch and submission, because oftentimes once you actually start writing deeper, you're like, oh, it didn't make as much sense as I thought it was. You do have a bit of flexibility. You can't though be like, oh, I submitted the pitch for a heart device, and now I want to do, an Alzheimer's drug. You can't do that. But as long as you're working on the same technology, you have a big ability to share.
one follow-up question regarding the government-wide and your topic in terms of like the project should appear comprehensive, not like have a gap. If you intentionally put a gap on like this part will be covered government money, this part or not, how that.
Well, okay, so great question. If you think about it, like anything that is actually risky and sort of ambitious enough that the government would want to fund it, you can't solve the single SBIR anyway. So there's always going to be parts that you can't actually do. There's parts you've done before for preliminary data. There's parts you'll do after. So that's not really that big of a problem. I wouldn't worry too much about that.
So if have government like these companies in the past for free, like have you seen that type of thing?
Yeah, so again, like they can only do it for government use. So like the only like confirmed case that I'm aware of is a company that had developed some like night vision technology for the Air Force, and they were like just after a long period of failing to properly integrate it with what they wanted, at a certain point they said enough's enough. They just said, here, company, take their technology and put it into our system because they can't do it on their own. Again, I said, if they're using their rights, like you probably have way bigger problems going on in your company. I mean, they don't really want, I mean, they don't want to be, they're not gonna be in business. They want to buy things from you. They don't want to, yeah, they're not trying to steal your technology. But like you could imagine that, I don't know, let's say the current Ebola thing suddenly just spreads worldwide and you have the Ebola cure, but you can't get it manufactured. At a certain point, they're gonna say, all right, enough's enough, we're gonna just take this monthly.
Yeah, I know you covered, DOD, what about for the standard of CDMRP?
Yeah, great question. So CDMRP is a non-SBIR opportunity, but it's definitely an opportunity that should be considered. So for those of you who don't know what the CDMRP is, it's like a mini NIH operating within the DoD. The important first thing I say about the CDMRP is they have all those different areas, and then within they have different mechanisms for things. One thing you want to do is make sure the mechanism actually funds companies. So there's lots of those mechanisms. If you look back at the awards, every single award in 25 years of their program has gone to a university. And so you probably don't want to apply to those. Some mechanisms do have a long history of funding companies. This holds true in other places as well. So like you go to NIH, you can actually, as a company, go after an R01 grant. You're eligible. The data says that 99.9% of R01 grants will go to university, so you never should. So you want to make sure it's a good match for you. The DoD obviously also brings in additional review processes. So they have like a scientific reviewer and a business reviewer. They also have like a sort of a patient reviewer, which is kind of weird. Usually you have to be further along to be competitive for CDMRP. So like if we haven't even won like a phase 1 or a phase 2 SBIR, you probably shouldn't be considering a CDMRP unless you have a lot of data from somewhere else. All right, super. Thank you guys.
For our talk today, I'll be kind of lingering around, Don, and myself, and SBTC, and you guys who just joined us. But yeah, thank you all for coming. We'll be sending slides out to those who everyone registered. So, but reach out to us immediately. Thanks. So thanks for first flight. I'll see you. Thank you. Thank you. Yeah. Actually,
I just think you're trying to just like, looking at, again, a lot of it is just kind of like.
Yeah.
No,
you're actually right, bro. They also have a big impact on that. Historically, so and also, in there, as a swiftly putting in. You might see opportunity in there. I'm calling you to ask questions. Everyone don't get it before. Yeah, we can go in there.
Okay, well, I will end up, then, I'm interested in it, thank you for your great time.
There you go.
I have a lot of questions for you. There's a lot of